Test mic, test mic. Let's see. Test mic, test mic. All right. Good morning, everyone. It's February 11, 2025, 9:53. A little late today, but there's really nothing going on yet. SPY is just consolidating. SPY is down by $1.40, and we're supposed to have a news in the next 7 minutes, and that's the reason why we haven't had any positions yet. So we'll look at what the market is going to do with that news that's coming at 10. All right, so we're watching. Rivian was really strong yesterday. It moved from 12.5 to 13. Not really a big move, just less than 50 cents. Today has a nice volume of 2.5 million. Pre-market low here is at 12.78 with a pre-market high of 13.07. Next one is Roku, has 500,000, not a lot. And then KO is up by 3.7%. Pre-market low is at 64 with a pre-market high of 67. A nice gap up here. We don't see that continuation though. AMD is just consolidating, testing that resistance at that daily at 111. Looks like it's about to head there. Pre-market low at AMD is at 108 with a pre-market high of 110. Let's see. So that is the AMD. And then next one, SMCI is strong as well. 25 million shares being traded for today. So SMCI pre-market low is at 39.3 with a pre-market high of 42.32. It's still an inside bar on the daily. Tesla, wow, Tesla had been so weak for a couple of days. Pre-market low is 345. Pre-market high 351. Looks weak still. Apple is an inside bar. Look at that big candlestick. Couple of minutes before the market opened. 225 pre-market low. Pre-market high 231. Baba is this an all-time high? Wow. All right, Baba is looking very strong. Pre-market low 107.82. Pre-market high is 114. So just curious if this is almost an all-time low or all-time high, I mean, for Baba. No, not an all-time high. Used to be all the way to 240. All right, so that's the Baba level. All right, 3 minutes before that news. All right, so that's the Baba level. All right, Baba still pushing. SPY still being an inside bar here. Rivian inside bar. I don't like how the daily looks like. Roku, although Roku is a gap down here, but look at all the previous candlestick here. So let's just put the level here. There's really not a lot of level because there's not a lot of activities during the pre-market for Roku. KO, of all this, KO looks like the one that's interesting. You have this nice gap up 3.7% up. Not an all-time high, definitely, but levels are all the way. Next one is, there is a level right here, the daily. A little bit of a pullback. This can be a potential for 9 EMA, where it will pull back at the 9 EMA, and then that's where it will start to bounce. But look at the volume bar right here. That's the thing that I don't like about that. AMD encountering a nice resistance right here. That's the level that we place, which is yesterday's high. Just about to touch that yesterday's high. So up by 0.58%, having a little bit of a pullback. Apple creating a 9 EMA here. It touched the 9 EMA and then having that pushed. I don't like how the daily looks like. Daily looks like just an inside bar. Not a lot of volume here when it's pushing down. All right, so we'll start a small position here with Apple. All right, so we started a small position to the long with Apple. All right, news is coming in. SPY having a pushed higher. All right, some volume coming in with SPY, adding to the Apple trade to the long. So this one is a 9 EMA play, touch the 9 EMA, and that's the time that we added to the long once we touch the VWAP. Not a lot of push through here. I don't like what SPY is doing. SPY is just hanging out there, taking some partial. So took some partial. SPY here still consolidating. Waiting for another leg up here. Look at what SPY is doing. SPY is just stuck in that level. So what SPY did was check and tested yesterday's this candlestick right there. All right, so Apple trade here looking nice. Waiting for Apple to retest that level. Nice. Took some partial again with Apple. We're encountering that resistance. Don't like that pullback right there with Apple. SPY also having that pullback. 231, no imbalance right here with Apple. All right, took all shares out. Did not like that there is that resistance there. So quick trade in Apple. SPY still not doing anything. All right, looking for another opportunity here. So just looking at what SPY is doing. So we only have one trade so far, and that is our Apple long. So Apple, we went long here. We got a setup 9 EMA, and yeah, we're waiting for another setup. Alright, so SPY here, looking weak. Looking for another trade here. Roku having a pullback. Big volume bar here when it was pulling back for the SPY. Alright, we're waiting for KO for a 9 EMA play where it's gonna pull back at the 9 EMA and we can do long. So SPY here, at least we got some volume, because earlier there's no volume at all. So now it's 3.3 million. Let's do some short in SPY. So SPY looking weak here. Alright, so I just did I bought put on SPY. SPY looking weak. So bought a put, making me a long short bias on the SPY. SPY still looks like it's about to test the level. Took some partial there. SPY technically is doing nothing. This is the kind of day that is hard for a day trader just because the SPY is just an inside bar. So this one, just expect that it will just be a consolidation kind of day. So 602 is yesterday's close. We're still in that range for the market. Apple here, let's see if Apple is gonna give us another still have a small position. We bought a put, so that means we are short bias on the SPY. SPY is just consolidating, doing nothing. Let's look for an easier trade. Wow. Alright, let's look for an easier trade. How about Tesla? Tesla still looking weak. About to test my stop loss there. Stop loss is our entry. Looking for KO for, wow, Apple is strong. We went all out in Apple, but now it's pushing higher. About to test the high of the day for Apple. So waiting for me to get step out here. Actually, because there's a lot of stocks that is moving. So let's put our stop loss here. So that will be 107. So we're gonna get step out here if it goes down to our stop loss, that 1.07. All right, next one, Roku, encountering a support here. KO, we're waiting for a 9 EMA. Apple reaching the high of the day, 231. What is the level on the daily? Then the next level there is 232. Apple. It's really not a lot. What is PLTR doing today? So PLTR having that pullback from 118. That was the all-time high. SPY, look at this one. How big of a wick for both sides, 603 and 602. All right, we're trying to see what the volume bar is gonna tell us. Look at how tiny those volume bar is. So there's no edge in trading this one. So it have a stop out. All right, so SPY. We made a little bit of a profit here, but stop out here. All right, Apple. Apple now retesting the high of the day. Okay, hold on, just a phone call. All right, so okay, so Apple testing the high of the day. We're waiting for another trade here. Look at what SPY is doing. It's just in the middle, nothing going on there. All right, so let's see if Tesla is gonna give us an opportunity here for a long. So entering a small trade in Tesla for a long. So for this one, Tesla has been weak. So we have to, even prior to entering a trade, what kind of trade are we doing? For this one, this is going to be a scalp trade only. So we have a small position to the long on Tesla. If we go above S4, we are going to add to this long position. There are some orders sitting at 343.75. Okay, adding to that long position in Tesla. Okay, Apple, new high of the day. Tesla here, our stop loss is the low of the day. SMCI pulling back. Alright, KO. We're waiting for a 90 MA with KO. KO almost close to that 90 MA. That's the trade here looking good. And SPY is just consolidating. Alright, resistance for Tesla 44. So this is a scalp trade, so I'm starting to take some profit here. Looking at the tape here, I don't like that there's a big resistance there. Took some partial again. Alright, and hit the stop loss. Alright, here we go. SPY is moving. So we took some trade in Tesla. Okay, SPY here. Trying to see what SPY is gonna be doing. Resistance again in the market. $603.44, $48. So while I'm looking at, there's not a lot of volume bar in SPY. $603.41. Okay, we're entering a small position here. All right, re-entering short in SPY, so that means buying a put. Stop loss is that low, 0.95. Retesting that 0.95. Looking at SPY here. SPY is not a lot of volume bar here. SPY encountering a resistance at 603.62, 603.7. Support at 0.87. Apple still ripping higher. So they are pushing the market 603.75. All out there. Some Tillism. Wow, look at Apple. It's just really strong. Okay, KO, we're waiting for 90 MA, but it still is going lower low, lower high. So no setup yet for KO. Still trying to see what the SPY is gonna do with this level. So SPY is about to touch the high of the day here, 603.96. $603.77. So thesis is, if SPY is really weak, it tests the high of the day and we get a big rejection there, then I'll be buying some puts. That means we are just trading options and we are just short the market. But I'm still trying to see what SPY is gonna do at the high of the day. Look at this one, a lot of volume there. Okay, we are now at the high of the day. All right, there you go. Pushing higher. Apple still very strong. All right. Yesterday's closing price at 604. That's going to be the next resistance. 0.57. So now we're just down by 0.1% or 65 rejection there. All right, where is SPY now? We are yesterday's level here. Let's just remove some of the level here so it's easier to see. So yesterday's low of that candlestick is at 604. It is acting as a support and a resistance now. Right now it's a okay, resistance. Still pushing this one, 604. No imbalance still. Some resistance at 604. So we're looking at SPY looking like it's topping out. So that's why I was buying put. So I am, yeah, small short position on SPY. Added to that position. Tesla now looking strong at the 15 minutes. Wow. Look at this one. That was a good push in Tesla. All right. KO did not give us a 9 EMA trade. 9 EMA was broken. So there's no setup there. Tesla consolidating. There's just no follow through with Tesla. Now out of volume bar though, when Tesla was having that red candlestick. So I'm waiting for a good entry to the long on Tesla. Tesla potential for a bounce. So 342, looking at the tape here, 30. Okay, entering long Tesla, small position. Added to that long position in Tesla. So we have a long position in Tesla. So SPY here just consolidating. What I don't like about SPY is at the 1 minute, there's not a lot of volume bar here. Tesla is just consolidating. Support here at 343. Getting close to getting step out here in Tesla. Apple having a pullback. Very close to getting step out here. SPY testing the high of the day. So close to getting step out here in Tesla. So Tesla struggling at 343. What SPY is gonna do at the SPY is just consolidating 604. It actually looks strong. Alright, Tesla just consolidating. Let's look at SPY. We're close to getting stop out here. Small put position. Okay, Tesla not ready yet. Strange. Alright, about to get stop out in Tesla. Alright, all out in Tesla. Tesla is not ready yet for a bounce. And SPY here. Pushing higher here. About to get stop out in SPY. Alright, stop out in SPY. So Tesla, it's about to retest the low of the day. Alright, KO now. KO, not a lot of volume here. Big volume bar when it's pushing down. 42. I just don't like that there's not a lot of volume here. 6.42. All right, let's see. Small position to the long for KO, forming that 9 EMA. Tesla retesting the low of the day, and low of the day acting as a strong support. So re-entering Tesla here to the long after it stop us out. All right, SPY. Yeah, SPY, they are pushing this one. Let's see. Testing. Next interesting level in SPY is 604.85. So let's see what SPY is going to do at 604.85. And then we re-entered Tesla here. So Tesla stop us out, re-entered Tesla at that bounce at the low of the day. Apple could have been a one and done. Look at this Apple here. Very strong. Now Apple is encountering a strong resistance here, 233. so Tesla here moving nicely. So this is the importance of sticking to your stop loss. So we were able to capture this move to the long. Then we were doing another long, but it stopped us out. So after that stop out, we re-entered the trade because Tesla tested the low of the day. So once it tested the low of the day, then we re-entered to the long, and then now it's moving nicely in our favor. All right, SPY is about to test the closing price yesterday, which is, let's look at the daily here. All right, R3 SPY. So it's Tesla looking nice here. KO not moving a lot. So with KO, we'll just put our stop loss here. So KO, just a small position, 66.43. So this put stop us out. Okay, testing the high of yesterday's closing price for the SPY, 604.9. So SPY countering a resistance here. Yesterday's closing price. But yeah, they will be pushing this one to the green side. All right, yesterday's closing price, SPY, 604.9. 604. Pushing it 605 for SPY. SPY encountering R3 here. Yesterday's closing price. $605. So next resistance here, 605.39. Resistance at yesterday's closing price with SPY. $605 still having a resistance with SPY. Apple encountering a resistance as well. Right, SPY, they're pushing it. Tesla about to retest the low of the day. So the next resistance 605.39. So Tesla, it's gonna stop us out here. All right, Tesla all out. KO working nicely here. Just buying a put on SPY. SPY about to test the high of yesterday. SPY had a resistance at 605.23. Okay, let's fix our the mini levels here. So next resistance is this level 605.46, but SPY had resistance at 605.23. KO close to getting a step out here. So SPY here, just an option trade for 605. We buy put, so that means we are short bias, and SPY do have that pullback once it reached the 605. So now, yeah, having that nice pullback. Look at what Apple did. Apple was just so strong. Apple, we were able to capture 230 all the way to 231, but it's now 234. BLTR at S3 here, but still has some room to go down. S4, okay, we're entering a small position to the Tesla long. Thinking if I should adding to this put on SPY. It's working nicely. Apple, it's like it's about to have that pullback. So SPY is still heading lower, and of course that's helping our put strategy here. So with a put, you buy a put, meaning you are short bias, but the way that you get to see it in your chart is it's actually the opposite. So look at the SPY having a pullback, and then when you pull your chart for the put side, So we bought a put at 605 that is 0 DTE. So you'll see the opposite here. So I bought it with an average cost of 0.95, and then now it's 1.06. All right, so Tesla is still not ready. All right, all out that Tesla. So options can be very good form of trading if you don't have a big capital. The only thing is it's taking a longer time than our usual strategy. Like what time is it? 11. If it's a regular just stocks trade, then we should have been done at this time. But just because we're also doing options, we're waiting for, a bigger move in SPY. KO, just consolidating here, but a small green trade there. Look at that strong 15 minutes on AMD. It's not looking back. Not a lot of imbalance here. What's Nvidia doing today? Nvidia inside bar. QQQ inside bar 2. Next support on Tesla. Look at how weak Tesla is. Wow, it's just like a waterfall. send it to that put position. What is Tesla doing now? Wow, Tesla down by $13. So we're heading to the choppy time of the day, 11:22, around 11:30. That's the thing about having an inside bar SPY. Nothing really, we don't get those quick moves. So this is like watching the paint dry. At least SPY is doing something. Touch 605 and then now having that pullback. All right, Tesla consolidating here. Still waiting for that reversal, but still looking weak. SPY here looking weak. This is the pullback that we were waiting for. Waiting for that support to be broken. Next support is this 604. All right, losing that support on SPY finally. I don't like this KO. We're small green, but it's just consolidating. just took some profit there. KO not moving as much. So Tesla had been testing that support for a couple of minutes now. going lower. That means our put is doing the move as well. Then our stop lost. All right, Tesla finally bouncing here. So we are gonna take a long on Tesla. Okay, just doing a long. Our SPY put was very profitable. Just a longer trading day today. This one is working nicely. Some profits there. So just added a long position to my 337.5 long options on Tesla. Tesla had a nice bounce here at 332.66. So this is what happens when you are on a range bound day, just like SPY. SPY is just, it opened an inside bar from yesterday and just going back and forth, and with Powell having that interview, it can be highly manipulated as well. Good morning. Tesla having that nice curl up after it had reached that 332.71 support. Okay, encountering that resistance. Resistance is that level from here. So this one just needs more time. What I'm not seeing right now is the volume bar. There's not a lot of volume bar to support this thesis that Tesla is indeed strong. This is the one that's missing here. That's why we only have a small position. Now at the 15 minutes, if Tesla goes above 335.39, that will be the good place to add to the long. QQQ, ETF Tech had a bounce as well, together with the SPY once it reached that S3. I need to see if there's any other stocks that's moving, and just like what we always do and we always want is an easy trade. So to add, if we reach that level 335.41, another pullback here, 383.77. getting close to getting step out here. Alright, so step out in Tesla. Tesla not ready yet for a bounce. Big volume waiting to be filled here, 332.53. So what's missing in Tesla is a volume bar. This is still medium-sized volume bar. So we're still in that consolidation. Although we had another leg down. And trying to see if there's any continuation in that leg down. So what happened here is there's a lot of stop loss that is placed right here. So that stop loss got filled by market maker. But then there's really not a lot of follow through there. So it looks like the big news that happened with Tesla yesterday was there were 75,000 shares of Tesla that were sold, and that explains that weakness. Because today when we open, it is a huge gap down, and it had been just a waterfall for past couple of days. All right, what else is moving? We are in that time of the day where this is just gonna be a chop fast time. So lots of fake outs and just some choppiness here. All right, so while Tesla is consolidating here, I'm just gonna grab my coffee and I'll be right back. right, did Tesla move yet? Okay, a little bit of a curl up. And 5 minutes looking nice. All right, 5 minutes looks good. You get this. Volume bar still missing. SPY is just consolidating at the VWAP. All right, what else is there's really nothing that's moving. Apple is looking weak. It's about to lose another moving average here. You got this curl. Yeah. If it's around 3, that could have been a good short, but right now we are still at that slow time of the day, so there might not be any follow through if it's a short one. All right, so we're waiting for Tesla for another stab to the long. Tesla had stopped us out a couple of times here. We're waiting for an opportunity for a long. We're now going to be using a higher time frame, which is the 15 minutes. Look at the 30 minutes. 30 minutes just no signs of strength yet. So while I'm looking at Tesla, waiting for that bounce, which probably is going to take a while, I'm just going to be looking at some options chain here. What I'm studying right now is a wheel strategy for options, where you can just get, because it's, what do you call this? Weekly or monthly income through that wheel strategy. So I would like to incorporate that with the daily trading stocks. So yeah, I'll just be looking at those Tesla option chains. Anything actually lost that VWAP? So Rivian is about to have its earnings on February 20. So we're looking forward to that as well.
on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time to talk
Fast Market,
one of the
ready
most
for you,
FOMO
ready to
type
go
names
at
as of
12
late. That's
p.m.
Meta
Eastern
Platforms,
on the
which
Schwab
if
Network.
we close higher today, which we're looking more hopeful as the session rolls on here, we would be closing out its 17th consecutive winning day, which is just wild. So here joining us now to talk more about investing, it's now Caroline Woods,
Fast Market,
New Markets
ready for
correspondent
you,
for the network.
ready
So
to go
Caroline,
at
we're
12
to even
p.m.
begin. It
Eastern
does feel like the
on
street's
Schwab
now
Network.
piling on with price raises, but perhaps necessary when we go higher every single day, at least the last 17.
Yeah, Jenny, I was going to say that 16-day winning streak might be in jeopardy today because Meta was modestly lower heading into this segment, but we've been seeing it bounce back and forth across the Unchanged Live, and it's currently up about 0.3%. So we'll see if Meta can make it to 17. But yes, analysts have had to notch those price targets higher because Meta has just been on a tear. It's already up about 23% so far this year, up another 4% this month, and very close to the all-time highs it hit within this winning streak. And just to put it in perspective, when Meta was lower today, we were talking about a decline of about 0.2%. So very modest. But 16 days is the longest winning streak of any company in the S&P 500 this year. And I have to give it to Barron's for putting that 16 days into perspective because in the Barron's Daily this morning, they said the winning streak from the Facebook parent is so long that Joe Biden was still running the country when it began. That feels like a lifetime ago. And I have to say that very much feels like the truth. But it's a good point because Meta has been able to gain despite a lot of market volatility that we've seen from things like DeepSeek and the sell-off that ensued and a lot of the big tech names from that, tariff threats and volatility in Washington, and big tech earnings season, which we've seen hasn't been all that kind to the Mag 7, but Meta has been able to buck that downtrend, which is pretty remarkable. It's by far the best performing Mag 7 so far in 2025. In fact, only Amazon is actually higher in addition to Meta from the Mag 7. If you take a look at the year-to-date performances so far, Tesla's down almost 18%, Apple down almost 9%, Microsoft down 3%, Alphabet down a little more than 2%, and then Nvidia down 1.5%. Netflix, though, I will say, is also up about 13% year-to-date. So we might need to reshift this whole Magnificent Seven based on the beginning of the year. But I think that, we've seen Meta able to kind of buck the downtrend and also avoid some of the headwinds that some of these other big tech companies have been facing. I mean, obviously the slowdown in cloud revenue growth is what has hit some of the other big names. That's not a key to Meta's business, so they've been able to kind of avert that. But also CapEx, which, while Meta is planning to spend a lot, between $60 and $65 billion in 2025, it's actually less than some of its peers and rivals. So maybe seen as a little bit less of a headwind. Microsoft's at $80 billion, Alphabet's at $75, Amazon's at $100 billion. Also, I've seen some industry sources say that DeepSeek, the new AI model there, actually could be a good thing for Meta and its open source Llama models, basically showing that it's a viable, scalable alternative to some of the closed models like ChatGPT. So, and then on top of it, we also have the potential TikTok ban, still very much a possibility. There's a lot of question marks how that will play out, but that obviously would be a ban would be a good thing for Mark Zuckerberg and Meta, because it could mean that those users have to, convert to becoming Reels users. And then there's Mark Zuckerberg also becoming closer to President Trump. And we've certainly seen that as a positive for Tesla shares as well, although not so much. So we'll have to see how that kind of plays out as well. But I was going back to that New York Times article from just a couple weeks ago, talking about the internal meeting over at Meta, and Mark Zuckerberg said the government can sort of be actively opposing you, trying to get in the way, add a lot of friction, or can be actively trying to help break down barriers to help you. It's it's the right thing to do. So really doubling down on trying to have a productive partnership with the government. So there's certainly a lot of factors at play here, a lot that's been working for the company, and I think the big question now today and going forward is, can the strength continue, not just to a 17th winning session, but as we look ahead throughout the year. And I will say, I just saw Tigris financial analysts. They would say yes, because they kept a strong buy rating on shares. They raised their price target to $935 from $645, which of course is well below where Meta is currently trading. But they say Meta has tremendous AI-driven opportunities for personalized AI-driven functionality across the platform of its apps. They see significant upside driven by the potential to monetize many of its apps, including Instagram, Messenger, and WhatsApp. And they say that that hiked 12-month price target of $935 represents a potential return with dividends of over 30% from current levels. So they're very much holding on to their bullishness despite this impressive run higher that we've seen. And hey, we're continuing to see it today because Meta shares are now up about 0.5%.
You know, Caroline, I'm shocked that I actually still have something to add, but I do. And I think it puts in perspective the truly historic nature of this streak that Meta is on. Like, I didn't realize this till I saw this morning, but according to data, any NASDAQ 100 company since 1990, and it looks like it's on pace to continue it. So this 16 days alone, the most of any NASDAQ company through the .com, the run-up of GFC, the run-up post-COVID, all of it. There's never been a company on this long of a streak in the NASDAQ 100 that Meta's on right now. I think that's incredible. Any final thoughts, though, maybe on that or on Meta in general?
Well, I think that, first of all, I'm not shocked that you had something else to add, Alex. You always have interesting insights, so no surprise there. And many thanks to the Bloomberg terminal for adding that interesting fact. So, you know, certainly I had mentioned that it's the only stock in the S&P 500 with this big of a winning streak this year, but obviously spans much further out than that for the NASDAQ. In terms of the analyst breakdown, I mentioned the price target from Tigris Financial going quite a bit higher with its new price target of $935. I will say, despite the fact that we've seen this hugely impressive run higher, and Meta shares are up 54% over the past 1 year, so it's been going on for quite some time. There's overwhelming bullishness that Mark Zuckerberg's investments in AI and Meta will continue to run higher, because if you take a look at the breakdown, there are 73 analysts that cover the company. 65 still have a buy rating, so that's almost 90% of analysts. There's 6 hold ratings and 2 sells. The median price target is around $761.50, so it was at $660 at this time last month, so we've certainly seen those expectations notch higher. The street high, though, $900 a share over at Loop. Street low, we always like to take a look at $505. So obviously there are a few that are betting against Meta, but several of these price targets are quite a bit higher than where Meta is currently trading. So they think that this bet, especially on AI from Mark Zuckerberg, will maybe pay off better than the bet on the metaverse did.
Okay, so I have to say that what will be really disappointing, because I'm impressed by both of your great adds to the NASDAQ 100 fact, as well as the fact that, I mean, this has been really just such an amazing and incredible story to watch, but only right now cemented by the fact that this name has been on a winning streak since Joe Biden was president. I mean, that's also an amazing fact. What will be astoundingly disappointing is if we don't see this name close higher today. That's my risk now, because I'm very enthusiastic listening to you both. I hope we close higher in Meta platforms here. But appreciate the breakdown and the great insight here, Caroline Woods, and that detailed commentary from the analyst community on, of course, Meta platforms. I mean, right now, when looking at this name, we're higher still, yes. Yeah. But we've also, like Caroline said, this is one of the only Mag 7 names now positive on the year.
Yeah, no, it's beyond impressive what they've done, and they've kind of flipped the script. Like, so many of this stuff could have been negative, right? AI was under fire, this TikTok uncertainty. All these things could have weighed on Meta, but they haven't. They've used it as strength. The political ties uncertainty could have weighed on it. It's weighed on Tesla, you could argue, at times, the same way that it maybe rallied it up. From a trading standpoint, though, maybe one of the hardest situations to trade, because you maybe would have thought, hey, this run's a little bit getting out of control, but you might have thought that 8 sessions ago. And so this is where it becomes defining whether you're kind of trend follower, are you kind of gonna fade the trends, and how you want to look at it. But I had looked at an example trade. Well, that example trade is already an hour later completely different because Meta has moved $7 or so. So the idea of kind of what I looked at, though, Jenny, to kind of talk about it broadly, was just looking at something short-dated, expiring at the end of the week, kind of going with the trend, some sort of a call vertical, smaller in size. And the reason being is you're kind of going with the momentum. You don't have that feeling of FOMO, but you control the risk. You keep it a little bit smaller and understand that at any moment this streak could break and you could have a substantial repricing.
Yeah, that's the only risk to streaks that last this long is now, I mean, how much longer can it last? When will we start to see this thing let up as far as its steam and its momentum as of late? And volume actually not near highs for the last 12 months. So it's not even being propelled by like super strong volume. It just continues to etch higher every single session. So we'll have to see, obviously, where we close out today in Meta Platforms, a name that's frankly been really impressive to follow. But coming up next, time to discuss Super Micro Computer ahead of this so-called business update today after the close. Hopefully we get some clarity from a company that has been definitely lacking in that department. We'll talk more about what we could expect from Super Micro coming up next.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time to talk Super Micro Computer with its, of course, business update this afternoon. I think it's critical that we are calling it a business update, not an earnings event, because that's per the company. But to tell us more and what the street's expecting is Diane King Hall, the host of Morning Movers. So Diane, walk us through this. I always think it's funny when you see verbiage that's slightly off from what we're used to, because I'm like, oh, business update, not a real earnings event.
Yes, it's true. I mean, look, the hope is that they will deliver earnings, but that is not how it's been characterized. So we don't know if that's exactly what's going to come today. A lot of focus on Super Micro because it's really been a tumultuous year, we'll say. I mean, if we go back about a year ago and think about where that stock was in March of last year, hitting all-time highs above 120 bucks a share, and looking at where it is now. Now, it has swung back since then, but here's the backdrop here. It needs to restate some financials and report some financials. It has not put out its 10K. It's obviously a key requirement for it to continue to be a NASDAQ listed, and it has to do that by February 25th. We're trying to find out what investors want to know more, and analysts want to know what do their financials look like. We're trying to get some light shed on that because You know, they came under a lot of scrutiny when that former short-selling the research firm Hindenburg, which dissolved earlier this year, in January of this year, had accused the company of some funny math and fuzzy math. Supermicro had fought back against that narrative and said that wasn't true. But that doesn't mean it wasn't under the microscope now, because there were then reports that the Justice Department had kicked off an inquiry looking into its financials, which cratered the stock at the time. I mean, it fell in October more than 30% at that time. Now, it has been climbing higher since then. The most latest, we've got CFRA upgrading Supermicro. Actually, get this, to a buy from a hold. Their price target is 48 bucks a share. 48 bucks a share. I want to reiterate. They say that the near-term margin recovery to mid-teens and market share gains appear likely given its proven rapid development capabilities and expanding product portfolio. We know it does have a dominant position with regard to its servers and its relationship with NVIDIA and using those Blackwell chips. So that's one of the things that's to its advantage. But again, the question is about its math. And keep in mind, it has some history here, guys. Let me pause so, you know, Alex can get a word in edgewise. Go ahead, Alex.
Diane, no, I think this is an interesting call from CFRA. Look, I don't know their math and stuff to get to $48. I'm not going to question any of that, but I will add some context I think is important from a trading and perhaps even investing standpoint. We're talking about a company that basically into perpetuity is priced with around 100% or more volatility. Basically saying the street thinks a reasonable outcome for this company over those time frames is to double or to go to zero, meaning there's a lot of uncertainty, Diane. So when I see CFRA in this case, and it's, again, nothing to do with them, it could be any shop, suggesting to buy a stock for it to go up $8 when the street's suggesting there could be $40 in risk, it just doesn't make a lot of sense. Now, had that 480 price target that you kind of accidentally misspoke and said, had that been that, totally different conversation. But for 20% gain, 100% implied volatility, I'm not sure it makes a lot of sense.
It is a head scratcher to me as well, and especially you look at the performance. It has had quite a run year to date, but you look at the performance today, it feels like trying to catch a falling knife. Now, I'll give another perspective. On the flip side of that, you have Wedbush on this, maintaining their neutral rating on this, and they have a much lower price target. Their price target is 24 bucks a share. Their questions that they bring up: what is its progress with filing these delayed financials? We already know that EY, Ernst & Young, has stepped away from being their auditor back then. That was also what else cratered that stock then, because it's like, okay, what's going on with your delayed 10K, 10Q? Those have to come out to be in compliance with NASDAQ listing rules. So we have that at issue. And again, the history of this company is, if you go back to 2020, they already had a problem with accounting irregularities and had settled with the SEC around that. The other thing that Wedbush is, can Supermicro actually meet the sales expectations, given the consensus sales expectations of about $5.9 billion. They had guided for between $5.5 to $6.1 billion for second fiscal quarter, and $6.1 billion for their third fiscal quarter. They talk about the uncertainty around its near-term performance. To your point, Alex, there's just a lot of uncertainty around this. And then there is some concern about potential slower growth when it comes to sales. They do think that was anticipated, and they think they've kind of built in some conservative estimates in terms of their outlook. But again, they just believe that these delays, if they continue to kind of kick the can down the road in terms of, outlining what their financials look like, obviously that would challenge the valuation of this company.
And I think that does remain a pretty good question, like what this company actually should be valued at. I guess that argument could be made for a lot of names out there, but with Supermicro, we've seen more of that come into question than ever before. So hopefully an update that's a positive one. As we know, this name can swing, and $8 right now being implied by the options market here. So we'll see some volatility, I'm sure. We're already experiencing that actually in real time on the session, but appreciate it as always. Diane King Hall, of course, the host of Morning Movers. Now, coming up next, last but not least, time to talk another name with earnings out after the bell, this time actual earnings. That's from Lyft, which will get their fourth quarter report after some volatility from its peer Uber. So we'll have to see how Lyft will fare.
With Schwab Investing Themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab Investing Themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Welcome back to Next Trend Investing's time for Under 30. George Tillis is here, senior markets correspondent for the Schwab Network. And George, we're talking Lyft. Now, Lyft made some big news in the last, 24, 48 hours with this partnership, robo-taxi type thing that they have rolling out. Now, I think this was a critical step for a company like Lyft. I mean, this is existential in my mind. George, what are your thoughts on it?
Well, I think it's interesting. I think if you look at Lyft, first off, I think of, obviously the rideshare business, that's their primary business. But I think about all the partnerships that this company is developing. And a lot of folks may have forgotten it or essentially say it's a second-tier rideshare company. But I think they're making, quite a bit of headway when it comes down to partnerships, delivery aspects of their business, because they don't necessarily have food delivery per se, but they are partnering with major retailers like Walmart, Home Depot for, same-day delivery for, other items like hardware or, consumer products. I think if you look at the overall business as well, from a cash flow standpoint, they're actually cash flow positive this year. That has always been sort of a challenge from their standpoint compared to Uber because they hadn't achieved the scalability considering they're a much smaller player. But the number of monthly active users just continues to inch higher. And that's a good sign for Lyft. And I think they're starting to generate some additional revenues in advertising. So for what it's worth, Lyft seems to be, not necessarily just the second best alternative to Uber when it comes down to size and scale for rideshare, but they're slowly encroaching on better financials, but also, increasing their market share slow and steady over time. Now, one of the things to keep in mind is they're going to be reporting earnings. The estimates for EPS is 23 cents, and that's a significant increase compared to last year for the same quarter at 16 cents. That's about a 43% estimated rate of change compared to last year, and sales are expected to be quite robust, 26% higher, 1.55 billion compared to 1.22 billion last year. So, one of the things I did notice is when you look at the top line sales for the business and you bring in that positive free cash flow, the company generated just in the last 4 quarters about $5.4 billion. They only lost 65 million in net income. So my point is that they're very close to break even. So with that said, anytime you see stocks that are trading near break even, that can create some volatility if they show some marginal improvement. And if that's the case, you could certainly see a nice move to the upside. But again, if they miss on the numbers, just consider anytime you're near break even, the opposite can be true, where the stock does trade quite a bit to the downside.
Okay, so George, of course, we make the comparison to Uber. We all do. But Uber, on its most recent earnings call, mentioned the wildfires in L.A., the added lapping leap day, as well as, to some extent, the weather in the south that was rather extreme in the quarter. I mean, all of these things, I can't imagine Lyft comes out unscathed because they're essentially very similar business models in the sense of, like, ride-hailing and, the gig economy.
They are. When it comes down to, rideshare, they're very similar businesses. But, when it comes down to rideshare as a percent of total sales, Lyft has more exposure. So when Uber denoted some weakness in rideshare, obviously the stock sold off. But if you notice, that stock has recovered quite nicely since then. And I think, there may be some elements to Lyft's earnings conference call based upon very similar rideshare struggles in the past quarter that Uber denoted. But like I said, that might be offset by some guidance improvement, and it may not necessarily be very pronounced guidance improvement for the number of monthly active users or total users. I think it has to do with the internal metrics. The company seems to be improving on an operational metric standpoint, and that's really the crux of movements in stocks. Obviously, you need top-line sales. That's, of course, the top line of every income statement. But if you're showing some improvement in margin, especially when you're near break-even on a net income basis, which Lyft is, that can be quite powerful. So for what it's worth, this will be an interesting earnings call, to say the least.
It will, and already making a 3.5% move to the downside even ahead of that report. And of course, we also get DoorDash out after the close. So lots of these names reporting, hopefully echoing some positivity after Uber did not see such favorable price after their earnings. But we'll leave it there. Great breakdown. As always, George Chalis, senior markets correspondent for the network. And Alex, looking at things as they stand, we are pretty much unchanged from, actually, we've fallen a bit from where we started the show here in the markets.
Well, we're basically just off session highs, but we have slipped in maybe the last minute or two. But for the most part, unchanged is actually kind of session highs. We were lower to start.
I was going to say, it all depends on what time frame you're looking at. I'm too zoomed in right now, but that'll do it for our show today. Coming up next, we have the watch list with Nicole Petalides.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the New York Stock Exchange, where we've seen stocks moving higher throughout the day. As Jay Powell's been speaking, we have CPI tomorrow. A lot of movers to talk about. Here's what's coming up on today's show. The CFO of OpenText, a Canadian software company, will join us and go over the company's second quarter earnings after beating the street's estimates for both revenue and earnings. Technical Tuesday, Charles Schwab's Kevin Horner will join us to take a look at the S&P 500, Tempus AI, and Tidewater. Our panel looking at Shopify, this fintech company, slightly higher after posting its revenue above the street expectations. What's next? Is the outlook too conservative? And quick look here at the market. So you have 2 hours left in the trading day. Here's a look right now. The Dow is in the green after having been in the red throughout the day. It's at 44,495. The S&P, though, is still to the downside here, down 2 points at 6,064. The NASDAQ is down 0.25%, and the Russell's down more than 0.5%. And oil and gold are both higher, $29.35 a troy ounce on gold, $73.30 the barrel for oil, up $1, $15.94 on the VIX. The 10-year bond yield 4.52. This, as Jay Powell saying, we're not in a recession and not really in a hurry to change policy in any way either. 107 and almost 108 on the U.S. dollar, and Bitcoin 95,695 as we speak, down 2% today. So for some of the biggest stories in the markets, Kevin Hincks, host of Fast Market here on Schwab Network, watching all the details. And of course, we heard so much about the tariffs. And tell us the very latest on where we stand pertaining to tariffs.
Yeah, a lot of talk, Nicole, on tariffs today, overnight, and into today's markets. Now, we know that some of the tariffs, like on the border and on fentanyl, were threatened to be imposed and negotiated away. And Colombia, with their problems there, those were negotiated away. Now we get to steel. That's a different story. The Trump administration wants U.S. production of steel and the jobs that will create. So putting tariffs on Mexico, Canada, and the EU in terms of steel, that's mainly Mexico and Canada, that's probably a tariff that isn't going to get negotiated away. Now, the EU and the reciprocal tariffs put on there for things like autos, all President Trump's doing there is putting the same tariffs on the EU that they already have on the United States. Now, they've already come out. The UK said they're ready to work with President Trump on solutions to the tariffs. So each tariff is different, but a lot of them will be negotiated away. The steel and aluminum tariffs, though, Nicole, not so much.
Yeah, understood. And for Canada and Mexico, away meaning a month from now, right?
March 12th is when they officially go into effect. And like I said, they have until then to negotiate them away. So, yes, there is delays, as they always are. And now the negotiation starts. But if they don't come to some resolution, tariffs go in place.
Right. So they've been postponed for some time to make sure that the border countries behave a little more according to what the president is looking for. How about Lyft? Earnings preview? It's on our radar.
Lyft is coming out with earnings today, as is DoorDash after the bell today. Remember, Uber had a bumpy earnings and then rallied after the earnings, so we're going to watch them really closely as they come out. Remember, Lyft is a fraction of the size of Uber and doesn't do the business that Uber does in terms of moving not only people from place to place, but things. They're much smaller, much domestic in the U.S. and only bring people from point A to point B. So we'll see how those earnings come out and, frankly, how they compare to Uber's and DoorDash after the bell, another key movement company.
Yeah, understood. And Lyft is a better performer. People wouldn't believe it, but Lyft is the better performer stock-wise over Uber, even though Uber has so many revenue streams. This year, 12 months, Lyft is the winner. Okay, thank you, Kevin Hincks. Always great to see you. Appreciate it, Kevin. See you later. Bye. All right, now we take a look at the bigger picture. David Steinbeck's with us, CIO of Hines, taking a look at the real estate market, the big picture here. Before we get into the weeds on real estate a bit, because I do want to pick your brain on that, tell me a little bit about how you're feeling now.
Sure. Yeah, so we're a real estate investment manager that really operates deploying capital in 30 countries around the world. And certainly the view I have this year, I think people need to remember that the private markets are in a much different place than the public markets. And the public markets have obviously had their recovery. And in the private markets, we're really only now beginning that recovery process, coming on the other side of over 500 basis points of interest rate increases. And so that change in cost of capital has had a dramatic impact to the pricing. And now there's a big opportunity. Most of the markets that we see right now are really in the buy signal. So that for us gives us a lot of optimism.
We've been hearing a lot about, rates and such, and that rates could come down, but that the housing picture will still remain tight because there's just not that much inventory. I know you look at commercial real estate, you look at residential real estate. Tell me a little bit about those two stories, the commercial side and the residential side.
Sure. Yeah, so on the residential side, we are seeing this is really globally. We're seeing a lack of housing really in all the major Western markets that we operate in. The U.S. specifically is over 2 million houses short, and we do think that's a real build opportunity in front of us. And so that is one of our key themes, at least, that we're going to be investing in, both in buying assets, but also building them as well. But in addition, on the commercial side, just more specifically on like office, for example, the new supply chain for office has completely shut off. And when you look across the U.S. today, there's really no real projects are going to be delivered anytime soon. And that obviously reflects a sentiment that has certainly been prevalent everywhere the last few years. What we're seeing, though, is a real bifurcation happening in the market, and the best office projects are getting very tight on vacancy. And the U.S., the last 2 quarters had positive absorption, meaning that there were more leases were signed than space giving back. And so that's a very interesting tipping point in the market that signals that employers are beginning to look at the space differently and certainly filling up the best quality. We think that will roll into the other elements of office, but for right now, it is the best quality, and we're focused on credit right now in the office sector.
Yeah, and you're deploying capital all over the world. I mean, I'm always focused on the U.S. because our investors are focusing more here. But at this point, the rate environment, how does it help you, hurt you, or you just sort of deal with it?
Right. Well, right. So I'll make one global, and then I'll definitely focus on the U.S. I mean, there is a decoupling happening right now with Europe and the United States. And normally, the interest rate policy is more closely correlated than it is today. And while the U.S. is holding steady to some signals of potentially some increases into the year, Europe is quite the opposite and are definitely in rate decline territory. Places like Switzerland are even potentially, there's talk of going negative again, which is just unthinkable relative to where we are in the U.S. In the U.S., though, specifically, rates are where they are, and we are pricing accordingly, and it impacts the amount of leverage that you can use, but that is probably a healthy dynamic for the market. And I do think the market has now fully absorbed where rates are, and even if they were to tick up a little bit, I still see a recovery path. And again, most of the markets we track in the U.S. are in the buy stage, and so that should give investors confidence.
I know you work in a lot of private markets, credit markets, but what do you tell investors now? Should they have real estate in their portfolio? How should they do that?
Obviously there's a tremendous opportunity on the private side. The public market is well treaded and well known for where it is. And again, its cycle is different than private markets. And so you really have to think about these as two separate cycles. And when you think about the private market, it is significant, and it encompasses infrastructure, data centers, and into everyday things, the living, retail, and all aspects of life, undergird real estate. And so within that, there are tremendous opportunities. And we also see it as a great hedge against what might be some higher than historical inflation that will be coming through the system. And certainly products like multifamily, where you're mark-to-marketing the rents every year, are a great natural hedge against increasing cost.
When you talk about different sectors, I mean, for example, retail or industrial or whatever, I know medical has done well, senior citizens' homes have done well. You said it's important to speak with professionals. I mean, not everybody is a real estate expert, just like everybody shouldn't be trading stocks. I mean, they're not all real brokers either, right? I mean, you got to look to the folks that you're making the point, make sure you check with people who know.
Right. Without question, real estate is a local game. There's certainly macro factors that affect how an investor should be allocating capital and how much and what proportions, and even maybe some bigger calls on the where. But specifically the what gets hyper-local quickly. And you need to understand your cities. You need to understand the path of growth and dynamics that are happening at a very local level. So that's something that we obviously bring to the table. But any investor looking at making real estate decisions, you have to get into the details to understand what is going to create value and be the winner versus where just the tides are moving against certain markets in cities. And so just understanding that is absolutely critical.
Yeah, and tell me once again about the funds, as I'm asking, what investors should be doing. You do have some specific ideas. I don't want to miss this opportunity. I don't want to run out of time.
Yeah, I mean, the way we invest for investors is providing them great access to products. So it's either through a fund vehicle, which gives investors some additional liquidity and cash flow, allows an easy allocation to real estate. But we also offer direct investing as well. And so some investors that might be sitting in a market and they want to own an apartment building, they want direct access to real estate. We also do that as well. And so really being able to offer both direct and indirect avenues into real estate and be able to do that globally across the risk spectrum, whether it's to build or to buy, is something that we see as a differentiator for us.
Understood. All right. Thank you so much. It's great to see you. David Steinbach, CIO of Hines. Thank you. Coming up, Options Corner. Tom White is standing by. He will highlight unusual options activity from the day, how investors are looking to trade on recent news of JD.com, Apple, Supermicro. Stay with us. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the Watch List. Time for Options Corner, where we analyze unusual options trades that we're seeing throughout the day. Tom White is here, host of Fast Market here on Schwab Network, and we're looking through some key names in the news, names we're watching with some big trades, and JD is on your list today, JD.com. Tell me a little bit about what you're watching here, Tom.
Well, most of the China stocks have seen a resurgence so far this year. JD.com's up about 17.5% on the year, up over 80% over the last 12 months. We've seen a little bit of a resurgence. We did see a dip earlier when that de minimis clause got kind of pulled away from some of the Chinese retailers, one of which is JD.com, but it doesn't seem to be negatively affecting the shares too much. I think one key note, even though the stock's down 3% today, we saw Appaloosa's David Tepper come out and kind of reiterate his pounding of the table on his investments in Chinese stocks, including JD.com, PDD, and Alibaba also. So maybe that's provided a little bit of lift for some of these names. And then if you take a look at the FXI, which is the China ETF, that's up nearly 10% so far in 2025. So getting a little bit of a bump here, but saw some unusual option activity in JD.com today, probably based on the fact that we're seeing a pullback, and Alibaba and PDD are both higher in today's session. A pretty aggressive bullish trade here that kind of stuck out to me. And this is out in the June monthly cycle. So you've got plenty of time in this trade, about 129 days, where a trader bought the 45 strike calls 2,500 times. And then to help finance that, he sold 2,500 of the 40 strike puts. So creating this bullish combo or bullish risk reversal that we might call it. He collected a credit of 55 cents. So what does that mean? Well, he doesn't start getting hurt on the position until that break even of about 39.45 to the downside in here over the next basically 4 months or so. That's about 3.5% below the current share price in there. So somebody's sticking their neck out thinking, I'll buy some calls, that's bullish, and then I'll sell some puts to help finance the call purchase, and that's neutral to bullish also. But pretty aggressive positioning here from this trader.
Okay, and these key names are definitely always in focus. How about Apple? Is this going to be a loved Mag 7 name of 2025? What's the trade that you found in the options market today?
Yeah, popping over 2.5% today, and that's probably on the back of that news that they're setting up a partnership with Alibaba to expand their AI offerings in China. So I think that's why you're seeing that stock up and most of the other Mag 7 names, besides maybe Meta Platforms, in the red today. There was a report out of the information that they're working with Alibaba to expand some of those offerings in China. Morgan Stanley immediately came out with a note on it that said if that partnership is confirmed, the firm would view it as a critical catalyst for Apple's competitive standing in China. Now, there's still headwinds for Apple, right? If the tariffs come to fruition against China, whether it's 10% or more, how will that negatively affect Apple, if at all? Because remember, in Trump's first term, he put tariffs on products from China, but he gave a pass to Apple, and it didn't negatively affect the stock or the purchases over there. Now, they've had some weakness as far as iPhone sales over there. Some of the competitors in China have kind of taken the lead there. It's only about 15% of their revenue at this point. But this would be probably a coup if this comes to fruition, where they're able to implement some of those AI capabilities into the Alibaba consumer base at this point. And then you still have the EU regulations, Department of Justice coming after Apple also about the charges on its app store. So there's a lot of headwinds, but the stock's getting a nice pop here today. And I think some traders setting up for some more gains into the end of the week. Some unusual option activity occurred in the February 14th weekly options that expire on Friday, the 235 strike call. So early on in the session, when the stock was still up only about 1%, they started scooping up those 235 calls. Over 50,000 of them traded early on in the session. Average debit of $1.20. So that break even for these traders at 236.20 over the next 3 days, that's less than 1% above the current share price of Apple. And now we've got that strike. There's over 100,000 options have traded on the 235 strike throughout the session. Call volume, double normal daily average volume with over 600,000 calls traded on today across all the option series, but with 100,000 of them just on this strike alone on the 235 strike.
Really interesting to hear Apple and Alibaba partnering for AI capabilities. It wasn't necessarily the tie-up some would have expected. In the meantime, folks may be excited on a side note that Beats has rolled out the Power Beats Pro 2 earphones that have some noise cancellation, transparency mode, wireless charging, heart rate monitor, and so on. For the folks that are interested in that, $250 pretty much. Last but not least, we're watching Supermicro, which has been under pressure today. There's a lot behind Supermicro's story. Let's hear about the bullish trade you found.
Yeah, under pressure today, about 7-8%, but at the same time, it's still up over 35% so far just this month. Now, the company gave an update that at 5 p.m. Eastern time today, they're going to have their business update. We don't know if we're going to actually get earnings out of this company, Nicole, because they have yet to file their 10Ks from last year and the previous quarter. The NASDAQ exchange has given them until February 25th to provide some details on those 10Ks, or they're potentially could get delisted from that exchange. But I think you've seen the euphoria here over the last, basically 6 trading sessions where people think we're probably going to hear some good news. Now, EY dropped SMCI in October due to some issues that they had with reporting. BDO is now taken over as far as their auditing company. But I think going into this earnings/business update today after the close, the option market's pricing in about a plus or minus 21% move in the shares either way. So expectations pretty elevated on the news and clarity that we're going to get from the company after the close, because if you look at their valuations really rock bottom at this point due to those headwinds caused by the accounting issues. But then also, AI CapEx investment continues to expand, and they are the biggest server builder out there. They compete with Dell and HPE and some others in that space. But so this is definitely going to be one of those stocks that moves. I don't know if it's going to go up or if it's going to go down, but we saw some unusual option activity in here, not surprising. And this was all the way out in the April cycle that kind of stuck out to me. The April 40 calls, trader bought over 7,000 of those earlier on in the session. Paid an average debit of about $8.85. So the break even for this trader is $48.85 over the next 65 days. So it's not a pure earnings play. That's about 24% above the current share price in there. But I just expect a lot of volatility in this name. We're seeing a little bit of maybe profit taking ahead of that business update that we're seeing today, but still solid gains for SMCI so far this year.
Yeah, and the bets in the options market are bullish and bearish. Yeah. So you're right. It's not really clear where this could be headed, particularly since, this was such a great performer, $123 pretty much, down to $17. Let's see what happens and what we hear. Thank you so much, Tom White, with our Options Corner every single day, looking at JD.com, Apple, and SMCI. Coming up, software company. We're talking to the CFO of the software company OpenText. She'll join us and talk about the company's second quarter earnings, paying down debt, what's going for cloud bookings, and the global story. They have a lot of big customers, too. We'll be right back.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hinks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalides, and we're live on the floor of the New York Stock Exchange. We have a few movers in the market for you right now. How about Coca-Cola? This one's a winner, moving to the upside today, post the earnings and revenue that both beat the street's quarterly expectations in the fourth quarter. The soda maker saw a return to growth for unit case volume, driven by growth in North America, Asia Pacific, Latin America. Shares of Coca-Cola winning for 2025, in fact, up 10%. Are up over 10% year over year. There you go, that's 52 weeks. Marriott sliding after beating street estimates for fourth quarter earnings, but issuing weak guidance for the upcoming year. Marriott's CEO says the company signed a record number of new deals in 2024, bringing its development pipeline to more than 577,000 rooms by the end of the year. Marriott hits new all-time highs last Friday and is up over 15% over 1 year. All right, let's welcome in our next guest of OpenText, Madhu Ranganathan, CFO of OpenText. Thank you for being with us and welcome back to the show. We spoke last August. You're based in Canada. We want to hear the very latest about your quarterly report. How did you feel about the last earnings season?
Yeah, thank you for having OpenText, Nicole. It's great to be with you. Look, since the Micro Focus acquisition and our AMC divestiture about 8 months back, we've been focused on getting our business model right-sized and delivering strong operations. Margin was a top priority. In our Q2 results, we showed that we can deliver an amazing 38% adjusted EBITDA margin, $500 million of adjusted EBITDA dollars. Our free cash flow was up strong to $300 million. And we had record cloud bookings of $250 million, and our cloud revenue grew 3%. Our revenue growth challenges for second half are near term. We had a few exceptions with one specific contract, 2 product lines, but localized in license and maintenance. It creates a headwind for a March quarter, and we fully expect to return to organic growth in Q4 with continued cloud growth.
And when we spoke last time, you had cloud growth of 10% or so. So that's continuing with huge partnerships and customers, the likes of Johnson & Johnson and Nestle, and you've been adding some new ones too. Tell me more about the cloud bookings, which you explained just now, but I'd love to hear more because I think people do focus on that, coupled with getting some new customers in.
Absolutely. So our $250 million cloud bookings growth for the enterprise in the quarter was 6% year-over-year growth. For annually, we're guiding 20 to 25% for our fiscal 25. In Q2, very good customer wins. Bosch for legal tech. We had ST Micro for the developer. BASF is using our business network for global supply chain. Novo Nordisk for observability and service management. and Gulf Warehousing Company, GWC Qatar, for content. Our next growth opportunity continues to be with our hyperscaler partners who play an expanded role in our cloud growth. Take Microsoft. We've decided to bring our XDR platform to market on Azure and integrate with MS Security Copilot. Our new SaaS platform and new sovereign capabilities will run on Google Cloud Platform, GCP. Our private cloud runs across the hyperscalers for customer choice, either AWS, GCP, or Azure. And SAP continues to be a very strong partner for us, and our SAP products runs in SAP Cloud and across all the hyperscalers. So yes, strong cloud bookings, the momentum continues.
So industry leaders are trying to sort of tackle how to handle AI, use AI, monetize AI, boost productivity with AI. These are the conversations you're having, right?
Yes, absolutely. Happy to share. Our growth strategy means embedding AI, which is our Aviator product, everywhere to empower what we call the knowledge workers to significantly raise their productivity. Our next gen platform, April is a big month. The next quarter is a big quarter for us. It's called Titanium X, and it's about 60 days away. As I said, we expect to deliver it in April. It's been a 2-year project where we've been embedding within our software AI, a whole new conversational user interface, as well as re-platforming for SaaS. So that's 15 Aviators and over 100 agents across our products. And beyond Titanium X, we are working on what we call agentic AI across all our product lines to create a new type of digital worker. So yes, Nicole, we have an opportunity to engage a very rich installed base, the 120,000 customers, and every customer is an opportunity to upgrade as well. And this is a big deal for us. It's top of our growth driver to modernize platforms, to lift them into the cloud, and of course, to be able to turn on AI automatically.
Yeah, and look, I mean, 120,000 enterprise customers in 180 countries plus, right? So that being said here, when we think about Titanium X, do you think that will make a lot of news when it actually occurs? Because we've been waiting for this, right? This is your moment.
Yes, yeah, we had a preview in Las Vegas in October. As I said, the teams are ready to launch it in our next quarter. And April is the time, and it's going to introduce us to SaaS and just unlock, quite a bit of opportunities. And the teams are very excited.
And tell me more about the outlook here. I mean, I know shareholders are happy they're getting a dividend, for example. You have growth strategies. Tell me about the outlook for not only this year, but really the long-term agenda, because you are working with the hyperscalers.
Yes. So the priority is fiscal 25. In fiscal 25, returning to organic growth in Q4, that's our fourth quarter. As I said earlier, we've made a big dent on margin expansion. We delivered close to 38% in our Q2, and we're targeting for the year 33 to 34%. So the outlook is going to be building upon a strong fiscal 25, Titanium X, and cloud bookings, and into fiscal 26 and beyond. From a shareholder perspective, look, the stock continues to be undervalued, right? We are very committed to accelerated cloud growth and margin expansion, capital returns. I will make a comment on that. We expect to deliver $570 million to our shareholders in this fiscal year, between dividends and share repurchases. We're strongly positioned, Nicole, for margin expansion, cloud growth, and continued capital returns to our shareholders.
Yeah, understood. Stock yesterday was really jumping on all the news, right? That was its largest percentage increase since November of 2023. So shareholders were happy yesterday. Long term, this is a stock that's gone from $40 to probably $27 or so. So it has been, beaten down a bit. But as you said, you feel like you're fairly valued. You have more value to give, right?
Absolutely. Between products, our rich install base, the cloud growth, and let's keep in mind, we are a profitable company, right? We know how to deploy our spend envelopes into innovation and go to market and remain profitable, and that's a good thing for our shareholders in terms of capital return. So yes, we're strongly positioned.
And last but not least, maybe just a final thought of what's on your mind today.
Yeah, so to continue to deliver a strong 25 and into 26, there's a lot of activity going on in the macro, including the new administration, but we see positives, between the SMB focus the new administration is doing, as well as the manufacturing. We're very well positioned. Or take Doge, for example, our software, our products, automation, AI focus, I think can take advantage of a lot of the macro developments as well.
Good to see you, Madhu Ranganathan, CFO of OpenText. Thank you so much for joining us here on Schwab Network on the watch list. Appreciate it. Good to see you again. Thank you. Still ahead, Technical Tuesday. Kevin Horner is standing by. He's going to look at technical levels that you should be writing down. S&P 500, Tempus AI, Tidewater. He'll explain. We'll be right back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides. It's time for Technical Tuesdays, and for that we bring in Kevin Horner, Senior Manager, Trading Services, Charles Schwab and Company. Thank you so much for being with us. So as I look at the S&P 500, you think year to date it's up 3%. 1 year it's up over 21%. The high was 61.28. We're not that far off it. But it has pulled back off the highs this year. So some of your thoughts about the key levels you're watching here, Kevin.
Well, Nicole, truth is we haven't gone anywhere since we last spoke this time last Tuesday, we're up about 25 points from that window in the recent history. So really haven't gone anywhere. Tried to digest a multitude of data over the last week plus, and I think bulls are still waiting for some semblance of a breakout. You haven't had one yet. They're watching the downtrend line off the peak from a couple of weeks ago and seeing if we can get a continuation breakout move. Has not occurred yet. And so we're watching that 59.90 to 6,000 ledge below us. That's about the 50-day moving average, which right now pins at around 6,004 points on the SPX. And I could certainly understand traders in the SPX here lightening up positions under 6,000. There's a level beneath us for gap support in here, maybe at around 5,900, another round figure at the bottom of that trend that we've seen over the last 3 weeks or so. That's a ledge to keep an eye on as well. But a few more below it, 57.75, the low we saw with the week open we got in late January. And then, of course, the 200-day moving average at around 56.65 to 56.75 right now. So I think we're just kind of stuck in the short run. Traders with new dollars ready to deploy are waiting for a breakout or a breakdown so they know which direction to play. Right now, it's just a wait and see, it would appear to be at this point, Nicole.
Understood, and they're waiting to see. And while some are expecting a correction, others are saying, look, the trend is higher and I'm going to jump on board. So that's that. We take a look now at Tempus, and this name has jumped at one point. I know it's pulled back, but it was looking at a record high close possibly. Tell me a little bit about this story.
Yeah, you're right. They made an attempt today for a wonderful candle and close, but obviously the first hour of activity today led to a bit of profit taking, it would seem. We've got a very lengthy tail at that zone of resistance between 76 and 79. The stock made its debut back in mid-June last year at $40 a share. That's where it opened, and it rallying that 78 ledge up more than 115%. From that level, and year to date, it's up already up 115% off of those lows we see from early January. Now, if we get a high close out of this today, let's say, for example, the thing closes over 79, maybe even over 80, you're going to see bulls potentially coming in with new dollars here. We should also call out, Nicole, the amount of volume on this thing. We can see it down below, the major discrepancy between volume at this year versus last year. Well, the numbers bear this out. At the end of 2024, the 50-day average volume for Tempus was 2.07 million shares. And today, that very same 50-day moving average of volume is over 18 million shares per day. So we've seen volume flow in. Volume can be that so-called rocket fuel to a new trend move. We're waiting to see if we can get that close at new highs. That could be very instructive for new bullish traders. Now, current bulls might be looking at that 76 to 79 area for a breather and might look to take a little bit of profit. Not on everything, of course, Nicole, because as we just clearly stated, a breakout could be fantastic for the Tempus position.
Okay, so we'll watch for that. In the meantime, the Tidewater stock, not such a pretty one, coming well off the highs that we saw last May, let's say. But what's going on now? Why is it grabbing your attention?
You're absolutely right. It had a really rough go of things, down 58% from the spring of last year. You're seeing a total peak to trough move of about 58% or so, and it may have carved out a bottom here. You'll notice that purple line, that's the 50-day moving average that we see. We have finally recaptured it. We've basically seen Tidewater above it for the entirety of the year thus far. Seems to be carving out a bit of a bottom here. Now, new traders to this one could be started at this spot, maybe moving on and calling a bad timing on this if it traded back below the 50-day, but moves through 59 to the upside could mean our resistance 2 comes into play. That's around 66. If we move through 66, then maybe resistance 3 comes into play. That's around 76 and the 200-day moving average. Now, obviously, we would expect, given the nature of the recent price action, that 200-day moving average is likely to continue sloping downward into our price action here. But the improvement on this chart is clear given the 6 weeks really above the 50-day moving average. I think that stands out for a lot of traders. So if nothing else, you've got some levels with which traders can start to position themselves for an appropriate opportunity on the long side, appropriate in terms of risk versus potential for reward.
And just finally, on the S&P 500, of course, we see market breadth really spread out. I mean, you're seeing a lot more. It's not just tech, right? I mean, you're seeing energy, materials. I mean, tech, financials, all doing well. We have CPI. We're going to have retail sales, more of Jay Powell. I mean, thoughts on the big picture here?
Well, I'm enthused, or at least appreciate the reminder that we've seen some improvement from a broadening of the group. Right, we've had some difficulty with some of the biggest names in the S&P 500. We've seen Apple has struggled. We know Tesla's in the midst of a pretty healthy struggle right now. So some of these larger Mag 7s aren't carrying us. And it's a wonderful reminder of why diversification of investments, whether it's in your long-term portfolio or a trade portfolio, can be really helpful for the traders. So I'm encouraged by what we've seen with the broadening of that rally. The hope, of course, is that those Mag 7s start to find that foothold and give us that leg to the upside once more, and then we can really start to see a carry. But in the short run here, I feel like you're on the money there, Nicole. The improvement and the broadening of the action over the last, say, 3-4 weeks here has been instrumental. It's been very helpful to maintain the level we've seen. Let's watch that 6,000 ledge beneath us. Let's see if we can't maybe push through that 6,100 to the upside, which is going to maybe give us that momentum continuation move we're all really hopeful for.
And look, I mean, you have the Netanyahu-Trump story here. Netanyahu really, the last thing, folks, Kevin and I were trying to hit everything, but you have the situation with Hamas. And they must free the hostages by Saturday, or else it's, sort of open season. It's just, you have geopolitical tensions, which could always come in here, too, into play. Kevin Horner, Senior Manager, Trading Services, Charles Schwab & Company. Thank you, Kevin.
Thanks.
Still ahead, we bring in our panel to discuss Shopify, those earnings. This fintech company higher after beating the street on revenue for the quarter. At least one analyst saying the outlook seems conservative. Is there more upside for Shopify than we realize? Let's get our panel on this. We'll be right back.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network.
the watch list. Our panel is ready to talk all about Shopify, which is up over 3%. It's been hitting new highs. 1 year up 41%. Can it continue to be a winner? Chris Wong, Research Director at Runnymede Capital Management, and Josh Ketter, Global CEO of Spreetail. Thank you both for being here. So, Josh, I'll start with you. Your big picture thoughts as revenue outpaced the estimates, and it gave a good outlook, too.
Yeah, honestly, it's fantastic growth for Shopify. I really see them continue to invest into the future. You see them growing 2 to 3 times their market, which is just fantastic. And stepping back, I realized this last year they added about $60 billion in incremental GMV in the retail space, whereas Amazon added about $40 billion. So it's the first time I've actually seen someone besides Alibaba surpass Amazon in that game. And I think that really speaks well to kind of how they're positioned and how they're growing disproportionately in the market and capturing share. So I like what I see. In particular, one of the things I picked up on the earnings call, they talked about how they're going from a 1-month free trial to a 3-month free trial, because they did studies that show that ultimately that results in better profit and better stickiness for those brands as opposed to the 1 month. And so they're going to pay a little bit of price for that in Q1. You see that reflected in their guidance, but I think they make up for that in future quarters and years, and that really demonstrates their long-term thinking.
AI really helping this company, Chris, wouldn't you say?
Yeah, undoubtedly. I mean, they are developing a lot of AI tools for their merchants. They've heavily invested in AI with Shopify Magic and Shopify Sidekick. And as you can see, their operating efficiency is really improving each and every quarter. So I think the AI tools are benefiting not only their customers, but also their bottom line. So AI is just doing great things for Shopify.
Granted, there's always headwinds and tailwinds for pretty much every company. If you dig, you'll find the outlook, people are saying, is pretty good. It's mostly in line, but does show revenue growth, and that revenue growth may slow a little. Over at Wedbush, they're saying that some level of conservatism in this outlook. Maybe things could be even better than they seem, Josh. I mean, what do you think about this outlook?
Yeah, I would agree with that sentiment. I'm a big believer in looking at people's history. And if you look at Shopify, they pretty much consistently forecast conservative and beat their forecast. And so I look at that in that vein. I'm not overreacting to their guidance. I think it's just indicative of what they've always done. And so I would actually expect the results to look very similar to what we saw in Q3, Q4. And I would expect them to beat their guidance.
And I think about pricing power, total addressable market, and the services that they provide. The market must be sort of somewhat endless because it's still not an established player. It's still fairly new. Chris?
Yeah, I mean, Shopify, they define their market, their total addressable market, almost $1 trillion. And they think the market's only penetrated 1%. So there's a ton of room for growth. They do have about 12% of the U.S. e-commerce market share. So, I mean, they are the dominant player in this space, and their market position just keeps on getting stronger. So there is still plenty of room for growth on the international side. It's only 30% of revenue, and that grew 33% in the last quarter. So that is even outpacing North America. So there's a lot of levers that they can pull in terms of growth, and they're really firing on all cylinders here.
Yeah, it's, I mean, 7 quarters, 25% plus of revenue growth. Really has been a strong performance. Look, we'll get retail sales at the end of the week. So much of this depends on the economy and people shopping. Josh, where do you stand there?
Yeah, you know, we have visibility to a little over $1 billion at Spreetail, and a lot of our brands do over $1 billion on Shopify as well. We just continue to see the consumer be rather strong. I think we're obviously watching the tariff situation that is posing a unique dynamic that we're all going to have to navigate together. I think that does impact everybody equally, and I think there's a lot of unopened or unanswered questions at this point. And so we're just kind of having to make sure we're staying agile, and I think Shopify is in the same boat. So I don't see anything overly concerning today.
Give us the opportunity to understand Spreetail a little better, quickly.
Yeah, we're an e-commerce enabler. So, you know, similar to Shopify, we try and grow brands north of 30% year on year. That's what we do. Our focus, unlike them, though, is I would say marketplace enablement. So we're one of the top 2 sellers on Amazon. We're one of the top 3 sellers on Walmart, and we're the top seller on Target Plus. And that gives us great visibility to really what consumers are doing across the ecosystem. We advise our brands, we give them great services, and we give them great fulfillment. We really specialize, I would say, on heavy, bulky, and that's where we add a lot of value. We're kind of a hidden player. A lot of folks wouldn't know about us, but.
And now, you know, Shopify continues to onboard some big retailers such as Karl Lagerfeld. Final quick thought, Chris?
Yeah, I mean, Shopify, they started off serving small to medium-sized businesses, but now they serve all the way up to the enterprise. I think the positive is that during the COVID pandemic, a lot of people reevaluated their careers, wanted to launch their own business. You've seen new business creation surpass 5 million each year over the last 4 years. So it's just growing their market and growing opportunity for Shopify.
All right, we'll have to leave it there. I mean, right now we're seeing the stock at 52-week highs and some of the analysts with even higher outlooks. Thank you both, Chris Wong, Josh Ketter. Good to see you. Thank you. That's going to do it for us here on the Watch List. Thanks for being with me. I'm Nicole Petalides, and download our free Schwab Network app. It's available in the Apple App Store. Tune in 24/7. SchwabNetwork.com. We have you covered. Right now, the Dow's up 129 points. You're waiting on Lyft, DoorDash, and so much more as we get to that closing bell. So keep it right here. Market on Close with Oliver Rennick next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education, crafted just for traders. Also, you can trade brilliantly.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
I'm Oliver Rennick. Get ready to cut the cord. Market on Close is coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Good afternoon. Welcome to Market on Close. I'm Oliver Rennick. You are watching the Schwab Network. Hour left in the session here, and it's pretty mixed. Definitely have some notable movers. This afternoon, we've got some important earnings. Going to take a look at Lyft and others. So we've got a busy session here. We got a lot of good stuff to talk about and a lot of smart guests. So let's get into it. Right now, the S&P 500 is positive by a hair, about 10 basis points. Still counts. Just below 6,100. We continue to battle for this area right below the all-time highs, 61.28 intraday for the S&P 500 index. Like I said yesterday, very, very close. You can almost just reach out and touch it. But right now, it's going to take a long stretch because we do have general dip buying, as we saw this morning, but we just don't have a lot of extension. So the market does really need to extend, not only just to get above last week, or rather last month's highs, but to take us back to the record from about now 3 weeks ago. A little bit of the issue seems like somewhat of just a kind of ebbing risk appetite. You do have bonds selling off. Don't really think that's so much of a problem right now, but there is quite a bit of news flow in Washington, whether it's policy, executive orders, tariffs, or Jerome Powell being pressured from just about every angle. There are certainly things here that are noteworthy, newsworthy, and creating some movement within markets. Though I would just start generally with Bitcoin because it's kind of been the early tell of some waning risk appetite, peaking out around the same time as stocks, and a pretty good representation of how we flatlined a little bit in the last month compared to some of the very exuberant buying that was happening across stocks, across speculative assets, across cryptos, running up into the election and through. A BTC down right now, close to an almost 3% drop off, about 2.5%. Again, these are huge numbers still that we're looking at for crypto, so massive success still for the asset class on expectations that the Trump administration is going to do something big. So far, we've seen a little bit of a trickle for some of the crypto news, but I do think that if there's one theme here, it might be that the bar is set very high for a lot of policy initiatives that the market got excited about. That's a subject from our risk radar at the end of the show. Yesterday, I turned stocks yellow from the green light because of the charts that have shown a little bit of slowing in the momentum. If you look at Tesla too, there's a message there as well that I think aligns to some degree with the Bitcoin trade. If you're just thinking about trades that did very well around the election, Trump trades, if you will, Tesla's chart is not looking great, obviously, pulling back pretty extreme. But what's interesting is that the MAGS group, the MAG 7, of course, is now becomes so disparate that the chart is sort of sideways as opposed to moving higher. I've repeatedly shown this chart over the past year as really the bastion of market bulls and a pretty simple way to describe the bull case for equities. I think it might be one of the more weak 3-month periods on this chart now, going back to the high from December last year. Obviously, we had the pullback in the summer 2024 around the Japanese yen scare. If you remember that, kind of feels like a lifetime ago. That was really the only time that the MAG 7 got hit, and arguably DeepSeek too to some extent, but we've had Meta making highs. Amazon's been doing very well. So there's just been division within the group that's largely netted out to a sideways move, but one could argue that the chart now is starting to test support. Hasn't broken, but a little bit of a flag, some kind of pennant, whatever your technical chops may draw for you. I do think that it's looking a little bit weak right now. So that might be of concern if it breaks, but it hasn't. And I do think that's kind of the message generally here of the last couple of weeks is some of this big upward mobility in risk assets is just slowing down. If you look at the bond situation and the macro, there's some action there, but I don't see that as the cause for any of this. It's not like we're getting a big bond sell-off, 0.25% for 10-year futures. That's not a big deal after they've rallied as much as they have. But there is something to think about in terms of the inflation story, because tomorrow we do have CPI, and alongside all of the Trump euphoria and Trump trades, there's been a big expectation that inflation is going to magically disappear, and that doesn't seem like a very reasonable approach right now. So CPI definitely carries some weight tomorrow. Perhaps some of this is just a little bit of a breather for investors to assess what that number is. Powell giving his testimony didn't really add anything terribly new, but did show a man pretty resilient in his convictions, both in how to run his policy and his path forward to move slowly, take it data dependent. If you look at inflationary implications from the commodity sector, it's interesting that crude is coming back at a time when it seems the main initiative to bring inflation down by the administration is to pump more oil. The fact that crude is firming up might have some geopolitical implications in the Middle East. But if you look at a broader commodity basket, the GSG fund, for example, looks like it found support at its previous one-year high and now might be trying to rally and break out again. So the broader commodity basket is looking quite juicy right now. We've had big moves in coffee. Copper had a pretty big week. Obviously, we had a big move in natty gas throughout the winter. So just a few things to keep in mind here ahead of inflation tomorrow. Let's talk some stocks, though, and some of the movers that have been active all day. Jenny Horn with me, host of the Next Gen. Tesla down right now 6%, Jenny. We talked this morning about the OpenAI bid and yesterday's heaviness in the shares may be related to this notion that Elon's stirring the pot even more, wants to literally buy off perhaps more than he can chew. But I don't know. I mean, this is a chart that's been peaking out for a couple weeks now. It kind of just looks like it lost some of that euphoric momentum.
I mean, absolutely, because yesterday we closed our fourth consecutive session lower. So that was even prior to news we got of any whisperings of AI, Sam Altman, the whole drama there. And I think that just seems to me like a very classic Elon Musk headline story. And that's the headline risk, frankly, of being associated with Tesla. I mean, you can make the argument all day long. This has nothing to do with the inner workings of Tesla's company, but Tesla trades as a proxy for Elon Musk. It just is a matter of what it is. I think the more interesting, frankly, maybe just to me for following this space, the more interesting news to me was that we saw this China-based launch event Monday where BYD, one of its greatest competitors overseas, announced the fact they will be now really advancing their smart driving technology, which will be a standard feature in their cars. Why I think that this is so critical to Tesla, though, is because these cars start at around $9,500. I mean, they're cheap. What? Yeah, when converted to
crazy.
I'm taking the Chinese. I'm converting it to US
Sure, not missing a zero there.
No, I promise. Like just over $9,500 when you convert to US dollars.
Wow.
So that is a very low cost vehicle.
Does it have an engine?
Apparently, it's going to have some self-driving capabilities.
Yeah, the self-driving is your feet, like the
like
Fisher
pedaling.
Price, like the Fisher Price.
It's just like a giant bike.
All right, so. Yeah, I mean, this is kind of what the Chinese market is. They make super cheap stuff and undercut the competition.
Well, and I think this then poses even more like threat to Tesla, whereas like when is their lower cost mass marketed vehicle coming? I mean, that's expected this year, sometime mid 2025. We don't have much clarity on that though.
That's a really good point, because that has taken a pretty notable backseat to all the self-driving stuff.
It has.
And everything else Elon's doing.
It has, and I know that Tesla later yesterday did say they were still on track to launch their autonomous ride-hailing services in Austin by June. Musk did say that they remain on track to roll out this offering to many cities later this year, so that was at least encouraging from an update standpoint. But yes, I do think that when you look at the narrative in which Tesla is trying to build as 2025 rolls on, they still have to offer, I mean, this pretty substantial low-cost vehicle where we've heard more and more. XPeng was another one, just unveiled more strong sales within China at a lower cost vehicle. It just goes, I feel like it's highlighting the parallel that Tesla right now is focused on many other things. Whether it's Elon Musk or not, the company's strategy right now, it seems like they're continuing to just lose that market share in China.
No, that's very fair. And I think that's a good assessment of the stuff that might be a little bit more meaningful for the actual earnings fundamentals down the road. There are certainly a very euphoric and somewhat logical bid that came into the stock as Elon became so powerful next to the president in this whole last 3 months, 6 months. But that's the stuff that I think that's really going to, to where the rubber meets the road eventually for Tesla's competition, pricing competition. The other thing, too, is that it looks like that EV credit might actually go, and that's another hurdle. But that kind of brings us to the policy stuff, the inflation, the tariff side of it, which also has a good bit of connection to autos. Ford CEO basically is saying that if these tariffs go through, it's going to be a disaster. That's expected to happen tomorrow, which I think is this kind of interesting Venn diagram between tariffs, inflation, policy, like all this stuff is kind of connected in this very Trump-centric way.
It is, and I also think, amazingly so, when we first saw, news about the ways in which Trump's administration will impact the autos, somehow Tesla was free of any sort of turbulence there. Like, it was like post-election, all of these auto names were falling. Tesla just wasn't. It was like, oh, the Inflation Reduction Act might go away. We might lose this massive EV credit. And how does that impact Tesla?
Right.
It doesn't. It's how we trade it.
That's big, exactly.
The reality is, I don't know why Tesla would be free from the headwinds that would face the entire rest of its industry. I think that Ford CEO Jim Farley has a lot of interesting commentary to say. He's been one that's been pretty outspoken against the ramification of these new levies in the way they could add $60 billion costs to the sector. That's per consultant AlixPartners. So he did say, let's be honest, long-term, a 25% tariff across the Mexico and Canadian borders will blow a hole in the U.S. industry that we have never seen. Called it devastating. Did say that this will provide a massive windfall to their Asian and European rivals that won't be facing the similar levies on cars that they right now import from their home regions. So, he has very, very concerning language if you follow him to say this is a big problem. This is his second time in just a matter of 3 weeks heading to Washington. So we'll hopefully get some more clarity there. He is also expected to try to fight the really rolling back of the Inflation Reduction Act because of the fact that there's a good amount of capital already sunk. You look at, though, the way in which Ford right now is trying to generate money on its EVs, it still loses a substantial amount per vehicle. So, they have now, they have things at risk because their massively unprofitable portion of their business is EVs.
I think that it's symbolically notable that Jim Farley, the CEO, is going to be making this testimony that he already is, that he's kind of voicing. He's sort of voicing the opposition now to tariffs, which are the biggest kind of policy subject. So it's definitely interesting from that point. However, the Ford chart tells us that they've got plenty of issues that have been their fault, moving slow, not being out in front of EVs, self-driving, much at all, really. Look, GM has been even a much better alternative. So.
I was going to say, look at the underperformance of Ford versus GM in the last year. And I know that GM slightly underperformed Ford the year prior, but you can't necessarily blame all of your recent turbulence, pun intended, on the new administration. This has been an ongoing story of pain for a company that's still hemorrhaging money in their EVs. Thankfully, that's such a small portion of their overall fleet that I think outside of the EV conversation, you still have a concern with the rest of their combustion, their legacy auto business is frankly a problem. If we're seeing shares down so substantially over the last year, I do think now this steel aluminum new proposal of tariffs is also really interesting, an added degree of uncertainty. But all this is uncertainty. He could go to Washington and say whatever he wants. You have to be able to right-size these costs, which, as it seems, Ford has not done the best job of being ahead of.
Right. Yeah. So, okay, that's where it's kind of, if you're at the back of the pack and you're saying all this kind of negative stuff, you do have to take it with somewhat of a grain of salt. Who doesn't seem to want to weigh in on the tariff situation? Mr. Jerome Powell. Basically, he's gotten really good at not saying much.
I'm stop asking him. He's not going to give you anything. He really doesn't give you anything.
Yeah, but he did a pretty good job, I think, kind of sparring a little bit, and he's held his ground in today's testimony and in the last couple Fed meetings where everybody has been just peppering him nonstop with political questions, asking what happens, if Trump starts to try and remove Fed governors, all that type of stuff. He's held his ground pretty well.
Well, and to yes to these reporters' points, I mean, we're seeing from one institution, the Brookings Institution did say that for the auto industry, we could see 177,000 job losses in the U.S. as a result of these export controls now. So that will impact the Fed. I mean, we talk job losses, we talk some of these like inflationary cost measures. This is going to eventually trickle down to the Fed. So it's not like he's free of the tariff conversation. I just think he's trying to stay as politically neutral as possible. But yeah, I can understand why he's being asked these questions, because this is our economy. This is going to impact the economy.
Somewhat of convenient timing for all of it, because the inflation numbers have basically put him in a place where he can stay very neutral at this point. Mm-hmm. So pretty close to their 2%, but not quite there. So can't be cutting too rapid. Good analysis. Thanks, Jenny. Nice connection, threading the needle between the autos, inflation, and tariffs. To continue the conversation, Arnhem Holzer is with us, global macro strategist at Easterly EAB Risk Solutions, a volatility guy, a correlation guy, and of course a macro thinker too. So Arnhem, when you see Powell in D.C. getting all these kind of policy questions, these lingering uncertainties, how much of this is going to cause any different trajectory for inflation than what we were already on, which was basically us getting stuck at like 3% inflation?
Well, I think, first of all, great conversation. Thanks for having me on.
Thank you.
The key issue here, Oliver, is that we still have a real dependence on whether this is a productivity miracle that we're engaging in since the post-pandemic period, or whether this is really just a fiscal priming that has engendered a lot of investment and a lot of free cash that is giving the appearance of a strong economy and juicing inflation. If, in fact, the productivity miracle is more real, and we did see a little bit of a downdraft in Q4, and I think there's some pretty explainable reasons for that. If, in fact, it is real, then Powell is right to avoid these conversations, because ultimately higher productivity allows higher interest rates, does mean that there's probably going to be more pressure on prices because demand's going to be better with wages up. And so if you square the circle that way, it's reasonable. But along with that comes higher volatility. Okay. And I think that's the piece where the market isn't quite sure. Now, of course, there are all these other issues with tariffs. You correctly bring those up. But ultimately, there is going to be a period of adjustment. And I don't think we should be surprised by, running into some headwinds until those things are obvious.
Right now, the volatility landscape is like trying to signal calm, even by calm standards. VIX back below 16. So does the market disagree with this right now, Arnhem? Or do you see volatility emerging in bonds first? Because bonds been pretty calm too.
Great question. When you look at the curve, and we always like looking at the curve a few weeks ago, the curve today, the short end and the cash end and the 1 month are clearly a little bit lower than they were, several weeks ago. But if you actually look at the longer end, the 3 to 6 month out, actually the perspective is higher. So people are defending further out because they really don't know what's going to happen further out. So I would be careful of just looking at the cash VIX. I don't think that gives you the whole story. And then the other piece of this is the way stocks are behaving. Correlations had gotten down into the 6 range, 6-7 range on the 1 month implied correlation, which is far too low. In a macro environment, you'd expect those to be between 20 and 30. They're now still down at about 10, 10.5. And to your point, you're actually seeing people believe it's a stock market. It's an idiosyncratic, a stock picking market.
Right.
But sometimes, Oliver, when you get such a stock picking market, those themes like cost cutting, what you saw with DeepSeek, what you've seen here with the Chinese incursion into cheaper EV vehicles, would look like a stock, an individual stock issue. But actually, if it becomes enough of a theme, it becomes a macro issue and can actually drive correlations up. So we would be careful, even though we think that if the productivity numbers come in at the end of this quarter and look like there's a recovery back towards that 2% or better range, which is higher than the average in the U.S. economy, you're still going to have, I think, some of these themes of competitiveness that clearly reduce the moat that some companies, the apparent moat that some companies thought they had and will adjust levels of volatility. So while I wouldn't panic, I would definitely point to some very, very clear signals that rates are going to be higher. I don't think the Fed's going to be able to get rates with a 3 handle into Fed funds. I think we're lucky if we get one more decrease later this year, and that may even not be done. And I think that the general level of uncertainty around, as we talked about, some of these cost-cutting issues, the tariff issues, the geopolitical issues, and the fact that rates remain a little bit higher does mean that vol is probably more of a player and should be more of a player in people's portfolios than they would have thought, given the relatively strong start.
So Arnim, then if I'm hearing you on some of the moat erosion of some of these big tech single stock winners that have helped kind of disperse the market into that kind of low correlation dynamic. Do you then want to own volatility as a hedge, or should we be like selling those upside calls or something in big tech or semiconductors? Take me through kind of the way then to get exposure to, if it's not a big crash, if we're not just like short and spoos, how do you do it?
Well, I do think there is a certain asymmetry in this market. You were talking about fixed income before. We don't see fixed income as a very good diversifier here, maybe at the short end and the short credit end. But if you look at volatility in anything beyond 5-year bonds in the longer bond area, actually volatility is a very high proportion. And if you look at TLT, it's actually higher than the level of implied vol on the equity market. So we wouldn't diversify that way. But I do agree with you. I think there's a way to play some asymmetry by giving up some of the extreme upside, because I do think higher rates constrain some of that. You're talking very high PEs on the market, certainly the market cap weighted market. On small caps, which a lot of people want to dive into, I think you have to be very careful, because small cap expectations are 25% on 1 year growth and close to 50% expectations on earnings growth for the next year. You have to be very careful there. So I think you can give up some of that upside. And similar to what we do in a fund we manage on the hedged equity side, you over-defend downside, because I think there is an opportunity here to get some vol spikes into that 20 and over 20 area. And I don't think you really give up that much if you give up some of the upside, because frankly, we do see some headwinds that are going to make this more of a dividend kind of year. Maybe there's going to be some mid-cap, some onshoring in the U.S. side that's going to win. But we think that valuation and interest rates somewhat floored here with the Fed being a little constrained is going to limit some of the valuation bump that you would normally get.
Yields in this scenario, Arnim, that you're describing, what's the range you see for the 10-year?
Well, I think it was a really interesting nuance. I think we all kind of snickered, because I think we expected Trump and maybe not Bessent, but Trump to come and say, I want rates lower. But I thought it was a really interesting data point that what he really addressed was the risk premium. I think what he was really saying is, I want the U.S. book status to get in order, so we don't have to have a high risk premium. So the long end premium can be tighter. So the curve, in essence, doesn't have to be quite so steep the further out you go. Not that growth won't be good, but that the U.S. Treasury, the way we issue our debt, the way we manage it, and the inflation premium and the government credit premium can be brought into balance. And I thought that was a very interesting comment that had some wisdom. Clearly, Bessent coached him on that. But if you look at volatility, on TLT, it has not affected vol on TLT. It is still basically higher than the vol on the equity market. And as long as that's the case, why would you be an owner of very long bonds? Because you're actually you're incrementally increasing your portfolio vol if you have long bonds in your portfolio. And so that's not helpful.
So then it's not necessarily that long rates have to blow out. It's just that the pressure is going to still be there to sell rallies in bonds?
I think that you have these two forces we talked about. If productivity is good, it's going to be hard to get rates down much, right? Because the reality is that the U.S. can accept a higher yield curve. Now, the question is, will the 5 and 10-year bonds be able to bring risk premiums in, because confidence in the deficit, and because confidence in the ability to manage inflation are good enough that you see that come in. So the curve could in essence flatten a bit. You might see the long end come in a bit, but the problem is the volatility associated with that is not enough to justify maybe another 15 or 20 basis points of coming in, that's the problem. So the curve really may not give you that good positive feeling that you need for a diversifying approach, assuming that the Fed can't ease as much as they used to ease. Remember, if rates stay higher because productivity is higher, the general economic conditions aren't bad. Equity returns should be good. Average hour earnings should be good. Inflation might come in just a little bit, but there's no need to drop rates significantly because your economy is functioning well. It's clearing well without having to drop rates. And the biggest problem we had for 10 years, the last 15 years, was really we punished savers.
Right, the opposite, yeah.
Which really hurt the 55 and overspending. And what we've done in the last several years is if you look at retiree and pre-retiree spending, some of the marginal propensity to consume has been as good as it's been in any decade in this country because we're actually compensating investors. And so I think Powell, without saying it, is basically saying, I don't want to penalize savers if I can get to a clearing rate that's higher.
Love that. Yeah, love that. I think it's a fantastic point. It's a very nuanced one, and I love it. We're going to have to pour it over some more next time. I know you've got thoughts on the wealth fund that might be getting built too, so we'll catch up sooner than later. Thanks, Arnim. Appreciate that analysis.
My pleasure.
Good stuff. Arnim Holzer, global macro strategist at Easterly EAB Risk Solutions. Right, really interesting there on potentially finding the clearing rate for treasuries. Like that. Coming up, we're going to talk some more about some of these big policy themes, some funds, some tariff talk, and where maybe to park your money, what type of assets are going to work.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Schwab.
Have a choice in how you invest with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Market on Close. I'm Oliver Rennick. We discussed the macro side there from the bond perspective, the Powell perspective, and the central bank. Let's now go to the tariffs, the other big one on our list to try and figure out. Fritz Foltz is with us from 3Edge Asset Management, the chief investment strategist. Fritz, welcome to the show. Thanks for being here.
Hey, thanks for having me, Oliver. I appreciate it. Good to be here.
You've got a couple thoughts on tariffs. You've got some funds as well, so I want to get there. Tell me firstly about why maybe folks might be underestimating the negative impact of these policies.
Yeah, sure. So, people pretty much know that what tariffs are. They're very simple, right? I mean, they're very simple. They're a tax on imports, goods that are imported into your country. It's a very simple tax. It's very straightforward. The problem is that the outcomes can be highly uncertain. And, we feel like President Trump, this is sort of his style. He's going to announce these tariffs, and the goal is to start negotiations. And then the countries that have had these tariffs pressed on them will make some concessions. And then, he has a couple of weeks. They don't go into effect for a bit. The country that he imposes them on can make concessions, and there's no need to use them whatsoever. But just like a real fighting war, how those start, they typically start in small increments where there's a conflict and then it escalates and it escalates further. And so there's a better than 0% probability that something could go wrong here. So we feel like maybe investors are too complacent and they need to be a little bit more focused on what could go wrong with these whole tariffs.
Where do you think it would show up in markets if it's going wrong? What might be the signs? What would be the clues, the crumbs?
Yeah, absolutely. So, what we've already seen was we're a multi-asset firm, so we're investing beyond just stocks and bonds, and we're investing in real assets. And clearly, those asset classes responded positively to this news. We hold,
like gold?
We hold gold, we hold commodities, and we hold tips. And those are three asset classes that can actually benefit from the fact that people will interpret the tariffs as being an event that is going to exacerbate inflation. In an inflationary environment, gold, commodities, and tips are all asset classes that can do well.
Is that your guys' hard assets ETF?
Yeah, exactly. So we have 4 active ETFs, and what we do is we cobble those together. Equities, fixed income, hard assets, and we cobble those ETFs together to create our strategies. One of the more popular of our ETFs is this EDGH, which is our hard asset ETF, and that's very well positioned for this environment.
Tell me about the tips side of it. How big of a role does that play? And chime in on kind of the conversation we had a little bit with our previous guest, because one of the things I've been racking my brain over is what inflation impact has on bonds, because I know the kind of default stance is if you think it's inflationary, okay, yields go up. But if it's inflationary, then the Fed's got to apply more pressure, then maybe we get more of that curve flattening we were talking about, and it's not as clear of a kind of upside for rates. Tell me where you think that that kind of shakes out.
Yeah, sure. So it's very interesting, actually, your previous conversation with your previous guest, talking about the Trump administration and their policy and how they have sort of backed away from talking about, hammering the Fed on lowering short-term rates and focusing further out at the 10-year and focusing on getting that yield down. And that in itself is a potential risk, because if that's really what they're focused on, are they willing to go as far as financial repression in order to do that? So that's yet another additional risk that we see out there. It maybe has a low probability, but the consequences of that, could be pretty extreme.
And how are you defining financial repression?
Well, there are a lot of different ways to do it, but basically you're doing anything you can to keep the yields down at that level. It may be in the form of quantitative easing. That's probably the most likely, where they basically just are going to print money out of thin air to buy those longer dated maturities. That's sort of the surefire way to do that. But in this environment, that's kind of counterintuitive at this point.
Fritz, I like the thoughts and analysis. Edge with an H. We'll keep it in mind and circle back with you, talk some more of the other funds next time. Appreciate it.
Thank you very much. Appreciate it, Oliver.
Yeah, good take, and also helps us look at gold in focus after a big rip in the last couple of weeks. Argument there connected to tariffs seems fairly reasonable. Fritz Foltz, 3Edge Asset Management. Let's talk options, flows, and charts next.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Welcome back to Market on Close. The stock's trying to hang on to small gains right now. Mr. Kevin Green with an intraday look and analysis of the options, flows, and more. KG, we're hanging out positive right now by a small thread, 60.71. What do you see in today's session so far?
Yeah, so far, Oliver, we're kind of hitting the upper end of the range. If you're kind of just looking at the volume right now when it comes to the options flow, 60-70 right now is kind of the upper end. But you are seeing a little bit of buying activity at the 60-80 level. If we do kind of break through this level, that would be obviously ideal for us to try to get as much gains as possible. What we do not want to see is a breakdown of this channel formation that's pretty much been setting up almost all day here. And if we do have a little bit of a breakdown, 60-50 is going to be that area that we want to be able to hold. And we may have a little bit of pen risk sitting at 60 here. But overall, this is actually a pretty decent day. Small range, tight range, a little bit of consolidation. I think that's kind of what we kind of signified when you're looking at the longer term time frame. We haven't seen a full breakout to the upside and or a breakdown. And I think it's going to be dependent on what's going to be happening for tomorrow. Once again, volume, I would say for the most part, it's kind of light for today when you're looking at not only just the index option flows, but also when you're looking at the equity level just in general. You're not seeing a lot of options activity or speculative options activity for a lot of the stocks that we usually see a lot of love for, either to the upside or downside. Even if you're kind of looking at Tesla, which is kind of fading to the downside, you're seeing some put action, but not a lot of put action there. So I think everybody's really in a holding pattern for tomorrow. And going into the close, once again, we're seeing compression right now. I would not be surprised if we continue to see that compression. It doesn't seem like we have anything that signals that we have this massive squeeze of 20 points going into the close for today, at least for now.
Boy, yeah, Tesla kind of in free fall the last 30 minutes since we started the show. I mean, it's kind of been that way for 2 days now. I know that there's few stocks out there that are more idiosyncratic than Tesla, with perhaps the most eccentric man at the helm, the busiest man possibly in the world. So I don't want to extrapolate too much from that single stock, but it just kind of does show up. If you look at some of the Mag 7 charts and stuff, you know, it's softened up a bit. So one of our big leaders here, whether you like it or not, that's a stock market leader. When it breaks down, it's going to make it harder for us to punch through those highs, those areas of resistance.
A little bit. So if you kind of look at the correlation last year, Tesla really didn't have that much of a correlation to the S&P 500, and it started to kind of gain that correlation.
How about since November?
Yeah, since the election, but I can go on the other side and say, okay, well, Apple didn't have any type of correlation with the S&P 500 in November. So basically, we're just seeing the baton being passed around, valuations a little bit stretched. He might be having a little bit of a Kanye moment today, so I think that's probably why you're seeing that sell-off as well. But overall, I think we're kind of holding. Hey, I gotta follow that. But overall, I think we're kind of holding up for today, right? We're not seeing anything too negative. It seems like the market's a little bit more resilient for now when it comes to tariff news, especially with some geopolitical risk that's on the radar here, Oliver. So I think it's a pretty decent setup for tomorrow. And actually, I do believe that we will see either a significant breakout to the upside, or we will see actually a significant failure to the downside. We've looked at the daily chart earlier this morning, and if we kind of stay where we're at right now, this is going to be, 4 sessions in a row where we've tested that upper channel line. It have not broken through. That's some significance that is there. Yeah. Now, obviously, participation has been lackluster. If you kind of look at it, we've been flip-flopping back and forth when it comes to the advanced decline line. Breadth is not really there. We're not seeing really good leadership outside of maybe NVIDIA over the last couple of sessions. Meta's kind of also looking very strong right now, but you got to also ask yourself, how long is that going to last? I mean, Meta hasn't faded since the inauguration, I believe. So there's a lot that's kind of there, but we do kind of have a little bit of a wedge pattern that's kind of taking place here, and we're at the apex of that. So we have a bigger trend, kind of, if you look at like the downside trend, we had a little bit of a breakout. Now we have another channel, but now we have an intermediate type of wedge pattern. And I think that's where we see a break up or breakdown. And the reason why I bring that up, Ollie, is because that MACD does not look healthy at all. If you wanted to call out something that's very bearish on this chart, it's the fact that MACD is really flattening out. It's not really trying to gain the trajectory back to the upside. And it would not take much to really see that cross, that 12 EMA crossing below the 26. That's a key sell indicator, unfortunately. So we're kind of at a little bit of a make or break. And given the circumstances that we have with tomorrow, with the high expectations of maybe a high inflationary print, and also kind of what you see on the yield chart, which we can kind of talk about that in another couple.
Yeah, well, hey, so tell me this, KG. Back to the where we're at in the wedge and the rejection from that top line that we see there that's slanted downward. When you say that you're looking for a big move potentially tomorrow in either direction, give me some definitions for that. So like to the upside, would that just be getting through that 6100? And then to the downside, would it be what? Down to the 59? Or are you saying something that goes beyond those big areas of volume or open interest?
You're seeing put flows to 5,900 to 5,880s. So that's the out of the monies to the downside. And to the upside, you're seeing put flows going up to 6,200, 6,180 to 6,200. Okay. And so the reason why I kind of bring that up, those are out of the money. But if you kind of understand these days, especially when we have big macro days like this, you're going to get these collar positions from these institutions where they're going to be buying the out of the money puts. They're going to be selling the out of the money calls. Usually that's where we get these levels, especially if you have a lot of volume there. The flip side of that, if you're a speculator, and this is not a recommendation, you buy the strangle. And so that's where they're fairly cheap. I mean, a lot of that activity, I believe the 5,900s are only going for about 55 cents or so, relatively cheap. You get a vol spike in the market, IV spikes to the upside. Those probably will pay off if you're able to scalp them as soon as the market gets open, and vice versa. If we actually have a better than expected print for CPI tomorrow, obviously markets probably going to rally off of that, just like we saw in January. And if that's going to be the case, and that's where we get the rip to the upside, I'm not seeing a lot within the meat of the market right now. Everything's on the wings. And if you're kind of looking at the skew index itself, it's call side skew for right now when you're looking at premiums. But the put side is where a lot of the flows for tomorrow are kind of setting up. And Ali, can I just bring up?
Real quick.
So we have a 10-year future, 10-year micro futures chart. And the reason why I kind of bring this up for a downside move, if you kind of look at the MACD there for the 10-year futures, it does kind of signify that tomorrow, given the environment that we have, we most likely, based on the chart, will see yields actually rip higher. And you could actually see that. Anytime that we have these MACD crosses, or even this hinge, or even a hint of a potential cross, we usually do see some follow through to the upside. That doesn't mean it's going to be a meaningful long-term one, but usually on an intraday basis, we actually do see that, or at least a follow through for the next 2 or 3 trading sessions. If we coincide that with the fact that markets are going to probably back out rate cut expectations if we have a hot print, I feel like that's bearish for the market. And the fact that we just cannot break that upper end of that channel line for 4 days in a row, given all of the information, it seems like it's more exhaustion that's kind of creeping into this market. Still technically bullish, but it seems like we're exhausted and we don't have anything to really kind of push us higher.
Very logical, and why I flipped the light from stocks to green, yellow yesterday. It just looks like exhaustion. It's not like there's anything real negative or scary, but just kind of looks like we keep running out of steam. Love the charts and like the analysis, especially for the potential for kind of a cheap straddle. You know, it's not often you really get those situations where you're kind of at a point of fluctuation in either direction with vol as cheap as it is right now. So if you're up for it, then outlay the cash to do it. Thanks, KG. Good stuff. Coming back, we got some good charts from the NASDAQ team thinking about inflation tomorrow. I'll be right back.
Trading at Schwab is powered by Ameritrade. bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Welcome back to Market on Close. Let's keep talking inflation with CPI, the economic data print of the week tomorrow. Brian Joyce joins us from the NASDAQ Market Intelligence Desk. He's managing director. He got some great charts. Starting with housing and the role in inflation tomorrow, Brian, let's start there. As a lot of folks are looking for housing data to catch up and help disinflate some of our figures. Do you agree or kind of disagree with that?
I would agree with that. I'm not sure if we're going to necessarily see that impact tomorrow in tomorrow's CPI, but I think that the Cleveland new rent chart really shows how much new rents are coming down.
It's coming off hard.
It's coming down quite a bit. We're not seeing that that level since 2009, 2010. But I think that's maybe that may take 3 to 6 months to really show up in the data. So so in the near term, if we do see some slowing down or some moderation of the disinflation, then you could see the upward move in rates near term, and that would have a greater impact on financials and smaller caps, like we've seen the trend being the case the last 12 to 18 months. But I think it bodes well for the full year 2025. So markets are looking right now for one rate cut. If it's a hotter number tomorrow, maybe that'll get priced out to none. That's something I would probably fade by in the expectation in 1 to 2 quarters out. That pendulum would swing back the other way, more towards the dovish direction.
From an inflation perspective, that's a chart that definitely brings your hopes up about disinflation. But from a demand perspective and an economic health perspective, it kind of looks alarming, does it not?
It can certainly, the reason for that, that pullback is certainly important, and if it's reflective of a consumer that's that's struggling, that's having a hard time, making ends meet, so to speak, then that would certainly be alarming. And so, if that is the case, maybe we'll see some, greater volatility in the marketplace. But I'm not really seeing that within the equity market so much. Year to date, we're seeing 9 out of 11 large cap sectors higher. At the equal weight index level, we're seeing 10 out of 11 higher. Even the small caps, 8 out of 11 sectors are higher year to date. Many of them are not yet back above those highs from November and December, so maybe that's something worth noting. We could certainly be in for some more volatility in the near term. But other signs that I would look towards is discretionary over staples. That relative strength, that's just coming off the cycle highs just a couple weeks ago. The MOVE index, which is measure of rate volatility, that's not showing signs of concern to me at this time. So I don't want to get too bearish at the moment. There's certainly a possibility we could see some increased corrective price action, but there's nothing alarming right now.
Okay. The home builders pulled back a little bit, but longer term still in pretty decent shape. Kind of connected to the point about housing. What does that group tell you, the prices of those stocks versus the actual prices of the homes that we saw coming off?
Yeah, and that's probably the sector that might be on my radar the most right now, the industry, because the ITB, that's the ETF for the home builders, it's down 20% from last fourth quarter's highs. But, the top 5 builders are down more like 35%. So that's interesting and noteworthy. And if rates do remain elevated in the next 1 to 2 quarters, you wonder, at least I do, what kind of impact that's going to have on the spring season, which seasonally is quite telling as to maybe how the year is going to go. So that's definitely something I think is certainly noteworthy, particularly if rates are going to remain elevated on the longer end.
Good stuff. Great charts, good perspective, nice continuation of our inflation chat. Thanks, Brian.
All right. Thank you, Oliver.
Good look at the Cleveland Fed on rents there, too. Quite a dramatic drop-off. Great squad coming up. Lizzie Ann Saunders and Cooper Howard taking us to the bell for a big picture discussion.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Let's get a big picture discussion going here. We got some time until the bell. Lizzie Ann Saunders joins me alongside Cooper Howard as markets are right now unch. Lizzie Ann joining us to talk some stocks. Cooper's on bonds, of course. So Lizzie Ann, get us started here as we've got an inflation print tomorrow. Right now, how much do you think the stock market can tolerate in terms of surprise?
I think it could tolerate a surprise on the downside, but less so a surprise on the upside, especially on a day like today where you have oil prices up by about $1 and yields have ticked higher. So, CPI, both CPI and PPI historically can have bigger moves above or below consensus estimates. It's a little bit more of a wild card. It tends to be a mixed bag month to month in terms of whether you get an upside surprise or downside surprise. Same with PPI. You don't tend to get as much of a move around consensus. The release of PCE tends to be closer to consensus because of the fact that the data you have in CPI and in PPI can be mapped to PCE. So CPI and PPI have had the tendency to be more market moving than the Fed's preferred measure. So we'll see.
Love that point. One that you've reminded us before, and I think it's a really important one. The timing at which things come out. That's where our conversation with KG, the technicals, kind of seem lined up for potentially a fun move for the short-term folks. Bonds maybe warming up a little bit here, Cooper. Some selling the last couple days, but I know we had a nice rally. How are you looking at that chart?
We have seen a little bit of a move up, but over the long term, like you've said about the past month or so, we have seen yields pull back. I think there could possibly be a little bit more upside in terms of yield from here, Oliver. Kind of what our team has been looking at is if you take the culmination of a lot of the policies that have been proposed in Washington or that are potentially coming out in terms of Washington, they do have a little bit of an inflationary bent. So if you look at things like trade, immigration policy, tax policy, all of those taken in culmination have a little bit of that inflationary side to it. So we could see yields move up a little bit higher over the longer term. Now, in terms of the short term, like Liz Ann mentioned, I think that the market's going to be closely watching what CPI comes in at tomorrow, as well as PPI later on this week. If we see a little bit softer of a print on CPI, a little bit lower, then I would expect that we might see yields move a little bit down in the short term. So it's also going to be a factor as far as what the Fed does later upon this year.
How about the curve shape, Cooper? Give me a thought on that as 10s to 2s have gotten squeezed a little bit in the last month.
Yeah, we have seen a little bit of a flatter yield curve, Oliver. And I think that the yield curve is really telling two different stories, or two stories, I should say. Maybe they're not different. On the short end of the yield curve, it's that the Fed is going to have to keep interest rates at an elevated level for an extended period of time. So maybe they won't have to cut as fast or as much as expected. We also potentially heard that from Chairman Powell this morning, to where he mentioned that the terminal rate is likely higher than we have seen in the past. That's something that we've discussed, so it's also something that we've heard from him before. So he just reiterated that point. I don't think we really heard anything new out of the Fed this morning. It was just kind of a reiteration of a lot of other things. Now, if you look at the long end of the yield curve, I think that that's telling a little bit of a growth story. Part of the reason why I think that yields have moved lower over the past month, even though they have moved up recently, is concerns over tariff policy, concerns over trade policy, and potentially that could be a headwind to growth.
Okay. Lizanne, I like that on bonds. Let's come back to stocks here for a moment, because the other thing that's happening is some breakage within our very reliable Mag 7 trade. It's slowed its roll quite a bit the last several weeks. What's the solution then for investors, for those who are just kind of like blindly kind of riding the market cap momentum? What's the factor? What's the style that we should have our portfolios geared to instead of those mags?
Yeah, there's certainly a lot more dispersion. You've got 4 of the Magnificent 7 are down in the, 330 to almost 500 in terms of ranking of year-to-date performance. Meta is the only one in kind of the top 10. It is a reminder of the risk associated with concentration. And as you know, Oliver, we've talked about it on this program. I think that individual investors shouldn't feel compelled to have a similar size and concentration in their portfolio to names like that, because they're not benchmarked against the cap-weighted indexes in an official way on a quarterly basis. That's an institutional problem, not an individual investor problem. And the turnaround in many of those stocks is a reminder of that. To your question about factors, obviously we have been very factor focused. And I think the collection of factors that make sense in this kind of backdrop, especially given deteriorating earnings estimates for calendar year 2025. Still double-digit growth, but it's been coming down a few percentage points over the last month or so, is to look for where there is still strong positive earnings revisions. Also bring that valuation and balance sheet component in, where you look for strong free cash flow, positives in terms of interest coverage, high interest coverage. And then maybe another kicker in this kind of environment would be that low volatility factor, so you don't get whipsawed. There are a lot of opportunities. There's a lot of breadth in the market. Only tech is underperforming in terms of negative performance this year. I just think staying in the quality realm from a factor perspective makes sense.
The low vol side of that, Lizanne, I do wonder, to kind of overlap with some of the bond conversation, how much does that low vol factor right now overlap with income or kind of bond alternatives? Does any of that look appealing if there's potential volatility in bonds coming back?
Well, dividend yield has been a poorly performing factor. And so that you need to be mindful of that. I think that the high interest coverage allows some protection against, to Cooper's point, the possibility of a further move up in, say, the 10-year yield. So avoiding those zombie companies, avoiding the low interest coverage names, as you experience volatility in yields, you have a little bit of protection within, from a factor perspective, in terms of what equities are going to do.
Okay, fantastic. Thank you very much, team. Great discussion, great analysis, helpful, useful. Lizanne Saunders, Chief Investment Strategist, Cooper Howard, Director and Fixed Income Strategist. A little over 2 minutes until the bell, and it's coming down to a photo finish for the S&P 500. We do have earnings, Zillow, very important, especially after seeing that big drop in rents chart.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
All right, test mic, test mic. Let's see if the mic is working now. All right, test mic. All right, test mic, test mic. Okay, perfect. Let's see if the mic is working now. Okay, so just what I was saying, we did a couple of trades today, and we're gonna be calling it a red day. So we are down by $96, of course, with the commission that can also add up. So today is a red day, and yeah, that's just how trading goes. So let's look at what SPY did. SPY is an inside bar. Given that the SPY is an inside bar, it will be a range bound kind of day where it hits a strong resistance and then it goes back to support. So that's what we expected. And the trade of the day is Apple. So let's look at what Apple did. Apple gave us a setup in the 5 minutes. In the 5 minutes, it gave us the 9 EMA play where it had that nice gap, not huge, but a very small gap, went all the way up to the VWAP, and then at the 9 EMA, had a pullback. You always wanted to enter a trade at a pullback, so that's where we started to build a position. So started a position at 9 EMA and then keep adding. So we were able to capture that move from, let's see here, 230.13 all the way to 231.17. So almost $1 move. And with sizing up with our position, we were able to get almost 1,500 with Apple. And then next one is KO. I'm not sure if KO is in app, is Coca-Cola. KO gave us a setup as well, and same thing as Apple, it's a 9 EMA. So daily, huge gap up. We can see that as well in the 5 minutes. Had a pullback at the 9 EMA. That's where we started a position, just a very small position, and then it was just consolidating. So we just exit out our position at the VWAP, but yeah, it did retest the high of the day at the closing. but small position. So KO gave us $32. And then next one is a long. We had a couple of long of SPY, and let's see. Well, let's save the best for last. We're saving Tesla. So Tesla, well, actually, let's start with Tesla. So Tesla was the loser today. We did a long on Tesla. This is our option strategy here, which is long at 337.5 and long at 332.5 options play. And then stock play, we had a long at Tesla as well, but Tesla never gave us the bounce. So at the closing, couple of minutes before the closing, I did re-enter and was able to just capture that small bounce, but not a lot to have us dig ourselves out of the hole. So with Tesla, initially I was green in Tesla. We had a long trade here, selling at the pop, and then long trade again. This time it didn't work out. That's first long trade that's red. This is the first long trade that's green, and then another one stop out. Lots of stopping out with Tesla, and it's just very, very disappointing. Tesla did not give us a bounce, so we are red in Tesla and overall red. So Tesla, with the stocks that we were trying to be long of, we're down by 1,200. And then for the long 3332.5 call and a long of 33.7.5 long as well, we were down as well. So with Tesla down in the stock by 1,200, and then for that call at 332 and 337, almost 500 down there. So yeah, very disappointed with Tesla. Now with the SPY, so SPY, we were doing some short strategy here using options. So with SPY, the way to see if it's a put or a call is, if it's an asterisk, it is a put. And if it's a call, like Tesla here, you have this sign. So Tesla, we were long. SPY, we were short bias. We were shorting SPY at the pop. And the way to do short SPY is just buying some puts. So we bought some puts. The 6051 was profitable at 853. The 604 put was profitable as well, but the 603 put was a loser. So 603 put, we were red there, 855. And then the Tesla here, this is the long that I did stop us out. 337 long, stop us out. So yeah, calling it a red day today. Very long trading day. So yeah, I am looking forward to a SPY where it's not an inside bar. Inside bar is always a challenge to trade. But what I like is a SPY that will give us a gap up or a gap down. This inside bar, it's just a chop fest, and even with the options strategy, we were down, but mostly wrong analysis, wrong bias on Tesla. And that's the thing about having some bias as well. You know, Tesla has been very strong for how many months? And yeah, it's just that hope that, we're going to be bouncing Tesla, and we are paying big time for that wrong thesis. But overall, red day, Apple at least gave us a nice run. Apple, if we had stopped trading, it could have been a one and done, but you know, there's no point in crying over spilled milk. But Apple could have been that 230 and then run to 235, so $5 move that. That gave that opportunity that we were not able to maximize. So with that, we'll end the day red, and we'll do this again next week. And that's why for today, just because it's a long hours of trade, we just have the news at the background, and hopefully next week, next Tuesday, we can have a better read on the market and an easier day, which our easier day is, you know, less than an hour trading day. So with that, thank you so much for watching. We'll do this again next week, Tuesday at 9:30. And yeah, thank you. I hope you guys had a green trading day, and I hope you guys had a better trading day than me. So with that, thank you, and we'll see you next week. Bye for now.